9:30 on the Eastern Seaboard. So that means it's go time. It is go time. Deuce, please mute yourself.
I got him.
Deuce. Got him. Cool. So, hey, first off, thank you, Jimmy, and thank you everybody else for joining this morning. Here is what we're going to be going over today. Here's what I have on my agenda. The first thing we're going to be talking about is something that I talk about regularly that is called the stages of learning. So this is just kind of what we're going to be doing today. We're going to be talking about the stages of learning, followed by the psychology of trading, and that's going to take a little bit of time, but that's okay. After we're done talking about the psychology of trading, we will talk about patterns. We're not going to go deeply into patterns. We're just going to talk about what patterns represent. Somebody's going to need to be muted on that one.
I'll catch him next time. Sorry, I was away.
Gotcha. Oh, no worries. So after we talk about patterns, and again, we're not going to talk specifically about head and shoulders, inverse head and shoulders, anything like that. We're going to talk about how patterns present themselves, etc. Followed by my specific trading strategy. And then we're going to go over charting. Now, at the end of that, we'll open it up to questions. So we'll do a Q&A. So what I would ask everybody to do is make some notes. I did post my strategy in the general chat. So if you'd like a copy of my strategy or my trading plan, if you will, just go ahead and download that. Feel free. It is open. So do that. So the first thing I'm going to do is I am going to share my chart. Not my chart. I'm going to share my screen. Now, I think we're going to be limited to 50 people on with screen sharing. So if somebody could also share their screen once they have my screen, that would be greatly appreciated. Okay, we're going live here, folks. We're going live. Boom, there we go. Okay, so as promised, the first thing that we're going to talk about this morning is the stages of learning. The stages of learning, the reason why I talk about this so often is because this is critically important. It's critically important. So the stages of learning, the stages of learning are apropos to literally every single skill you will learn in your life, whether it's driving a car, hitting a golf ball, learning to trade, learning to swim, literally doing anything. It's all about, you have to go through all the different stages of learning. So let's talk about the first stage of learning. It is called unconscious incompetence. That is essentially where you don't know what you don't know. This stage, the first stage, is characterized by pretty high confidence. And people typically have high confidence in the first stage of learning, or the unconscious incompetence stage, because they watch somebody. They can watch Jimmy trade. They can watch a really, really good trader trade, or watch Tiger Woods hit a golf ball, or my man Raf Money hit a golf ball, and they make it look easy. So you take somebody that's super, super highly skilled at any skill, and somebody comes along, they watch them, and they think, hey, that looks really easy. They think, I can do that. It won't take very long to get that. So their confidence is high. Now, their confidence, when they get to stage 2, the stage of conscious incompetence, that's essentially where you know what you don't know. Your confidence kind of gets shattered. So you go from high confidence in stage number 1 to low confidence, or even no confidence in stage number 2. And we see this all the time with traders. And the vast majority of traders fail because they can't get past stage number 2. Stage number 2 is where the vast majority of learning takes place. And trust me, as everybody in here knows, this is not easy. I mean, there's nothing easy about this. But at the same time, this is the most difficult, easy money you will ever make in your life. Once you figure it out, once you figure out how to do this, it becomes very, very, not easy, but it's really, really straightforward. You know what you're looking for. So stage 2, and I'm not looking, but I'm sure a lot of people are, nodding their heads when I say this. This is where most people quit, because this is so hard. And they quit most things in stage number 2 because it is so difficult. Regardless of what the skill is you're trying to learn, it is really, really difficult. Now, if you can get past stage number 2, you move into stage number 3. Stage number 3 is called conscious competence. So you move from stage 1, where you don't know what you don't know, to stage number 2, where conscious incompetence, where you know what you don't know. You have a good understanding that you really don't know a whole lot, to stage number 3. If you can get to stage number 3, you're going to do very, very well. Stage number 3 is called conscious competence, or you know what you know. So you have a really good understanding of what's going on. You can look at a chart and you go, okay, that looks like a pretty good setup. That's where you really start to do well. So I can, no guarantees, no promises in any business, and particularly in trading. But if you can get through stage number 2 and get to stage number 3, you're going to do very, very well. Now, incidentally, stage number 2 is like, it's like the miner. It's like the gold miner. I don't know if this is an accurate story or not, but I've heard it multiple times. It's called 3 feet from gold. A miner set out in the 1800s to mine gold in California. And he, sold all of his earthly possessions, and he moved to California, and he started digging for gold, based on the maps, based on where he thought gold to be. And he toiled and he worked, and he, worked his fingers to the bone, damn near killed himself, and he didn't strike gold. And he threw up his hands and said, I'm done with this. And, a guy came along and said, well, how much do you want for your equipment? And he sold him all of his equipment, and he sold him, the claim to his land. And the man who bought all of his stuff, he did some calculations, and he thought, man, this guy's really close. He's literally 3 feet from gold. So he, started mining, started digging, doing whatever gold miners do. And he struck gold and became super, super, super wealthy. And again, I don't know the veracity of that claim, but it's very, very true. Most people stop when they're 3 feet from gold. They stop when it gets the most difficult. And again, this is very difficult. You're taking those losses every day. You're banging your head up against the wall. Why did I miss this play? Why did I miss that play? Why did I do this? Why did I do that? Folks, I'm telling you right now, you are literally 3 feet from gold. So keep on going. Dig in. You will get there. This is hard. You get there. It's called stage 3, conscious competence. You know what you know. Again, you can look at the chart. You go, hey, there's my setup. Now, it still takes all of your concentration at this point. But once you're at this point, you can really, really start doing very, very well. Again, regardless of the skill that you're trying to learn. Now, when you get past that, this is where the magic happens. It's called unconscious competence. It's you don't even know what you know. You can just do it. People say, how do you do it? You're like, I don't know. I just do it. You see your setups before they happen. And again, it's like riding a bike. It's like driving a car. When you get into your car after you've been driving for a while, you just drive. You don't think about, okay, I need to hit the gas here. I need to hit the brake here. I need to turn on my turn signal. You don't think about any of those things. You just do it because you're literally in that 4th stage of learning, the unconscious competence. And it's like riding a bike. You never forget how to do it. Now there is a 5th stage, and I guess I really don't go over the 5th stage too much. It's conscious competence of unconscious competence. It's where you're able to teach specific things with really not a whole lot of thought. And again, I don't really go into the 4th stage and learn about the 4th stage or the 5th stage up until recently. But I'm telling you, folks, if you can get to stage number 3, stage number 4, it's a new level. And there are traders in here that are at that level. I'm a stage 3 guy. I believe I'm a stage 3 guy, working on stage 4, and I work on it every day. And I know a lot of people in here work really, really hard. I think the vast majority of people in here work really, really hard. They're trying to get this. They're spending time. They're looking at charts. They're working on the psychological part of the trading, which is it's the most difficult part. So with that, let's move into the actual psychology of trading. Now, I always kind of start off by saying anybody can learn to read charts and develop a trading plan and a trading edge, and you can. Anybody can do the back testing. The back testing is it takes time, but it's relatively easy to do. But the most important part of any plan is execution. And that is all about the psychology of trading. So execution is nothing more than entering and exiting when the market gives you a signal to get into or out of a trade. And until you can execute your trades without trading errors, listen to this is a big deal. Until you can execute your trades without trading errors, you have no business whatsoever in increasing your position size. Okay? That can be a single contract. For a lot of people, I say, hey, you're getting beat up pretty good with a single contract. Move to a single share of stock and follow your plan. Follow your plan 100%. Don't change anything about it. Do 20 trades in a row with that specific plan, and then figure it out. Figure out where you are at the end of the 20 trades. Now, based on your specific trading style or your edge, you do not put on a trade until the market gives you a signal to put on a trade, period. And that's part of the psychological part of trading. I've said this before. If you wouldn't put on a 100 contract play, you shouldn't put on the trade. You shouldn't put it on with a single contract. You shouldn't chase a trade. We're not dogs. We don't bark. Don't chase trades. If you don't have an edge, then you don't put on the trade, period. Bottom line. Now, and I know somebody's probably going to write this as I'm speaking it, but the two biggest trading errors are hope and fear. Now, hope comes into play when a trade is going away from you, so the trade is working against you. Now, most traders let a losing trade go against them for far too long. So as a result of this, we must always, always, always predefine our risk before putting on a trade. Now, there can be no equivocation about this. If you do not predefine your risk, meaning if the trade goes against you at this level or at this candle or whatever the situation is, you're not predefining your risk. Now, your predefined level of risk should be closely tied to your trading strategy. For instance, if you're playing the 920, then the candle that got you into the trade should be the candle that gets you out of the trade. I call it an ignition candle. An ignition candle is nothing more than the candle that confirms you into the trade. Now, if the next candle or two candles later goes against you and it closes, I look for candle closes unless it's a big Shrek candle or a big Twizzler. I'm getting out of the trade, period. No discussion about it. You can always get back into the trade, but you must predefine your trade before getting in there. Now, if you're playing something like support and resistance, then if it breaches that resistance when you're going in on calls, so you go in on calls at resistance, hoping to ride it back down to support. I'm sorry, puts. Then if it goes against you, if it breaches that level of resistance, you get out. No questions about it. No question at all. Let's see. So that's the hope side of it. How many times have we let that trade go? And I know people in here yesterday, people in chat yesterday, they got into puts at the very, very bottom. A lot of money, lots of SPX contracts. And they let it go against them to where they were down thousands and thousands of dollars, hoping that it would come back to pick them up. And you know what? Sometimes you get lucky and it comes back and picks you up. But that is that's bad trading practice. If you will break your rules once, you will break them repeatedly. So have your rules. Let's not hold. Let's not hope. The corollary of that happens on the other side, the other side of the trade, the fear. The fear comes into play when the play is going in your favor. And fear is just as big of a killer of your trading as hope. So fear happens when you get into the trade, it's going in your favor, and you're watching your P&L. And we've all done it. We will all continue to do it. But if you are watching your play, if you're watching your P&L while you're in the middle of a trade, guess what? You will, more times than not, punch out prematurely. And essentially what that is you are not following your specific trading plan. Now, if your trading plan says, oh, I'm going to take profit at 10%, then that's part of your trading plan, then get out of the play. But if your plan says, I'm going to take it from resistance back down to support, or support back to resistance, or I'm going to wait for a 920 cross, or whatever, I'm going to wait for a certain fib level to hit, then you, in my opinion, you must wait for that to happen to get out of the play. The market will always give you a signal to get in, and the market will always give you a signal to get out. Now, remember that. There's always going to be a signal to get in based on your strategy, and they'll always give you a signal to get out. So let's not take those premature profits. Let's let the trade play out. Let's let the market take you out of the trade. And the argument is going to be, well, I'm going to leave money on the table. Well, I hope you leave money on the table. I hope you leave money on the table every single time, because what that does is that will ensure that you follow your trading plan. Okay. All right. Now, as retail traders, what we like to do is we tend to eat like a bird and shit like an elephant. And that happens because of that hope and fear. Again, we're letting the losing trade go on too long, and we're taking profits way, way, way too early when we are in a winning trade. What we want to do is we want to be able to eat like an elephant and shit like a bird. Let me see here now. 3 things can happen when you put on a trade. The 3 things are: you will make money, you will lose money, or you will break even. Winners and losers don't matter. The only thing that matters is you follow your trading plan. Execution is the only thing that matters. Okay. Now, when your edge presents itself, because I get comments all the time like, I get my signal, but I'm not getting into the trade for whatever reason. I'm hesitating. Hesitation is a huge part of trading. It's like, I'm afraid to get into the trade. I'm terrified. Somebody yesterday said, I am terrified to put on the trade. How do I get past that? Well, it's difficult, but at the same time, it's easy. Okay, so the difficult part is your edge presents itself is difficult because you might have some scar tissue built up. You might have had, a bunch of losses in a row. You've taken some big losses. You're getting the small wins and the big losses. That might happen. So when your edge presents itself, you are compelled to put on the trade. Now, you're compelled to put on the trade when your edge presents itself because you do not know if the trade you put on is going to be a winner or a loser. You have no earthly idea. I mean, you think you have the perfect setup, and maybe you do have the perfect setup, but you lose money on the trade. That's okay. That's just part of the deal. We're going to have winning trades. We're going to have losing trades. This is all based on probabilities. That's why I'm a big believer in charting or recording every single one of your trades. Have a trading journal. And in my training plan, I go over what I have on my trading journal. You don't have to have those same things, but it works for me. Now, you'll notice that the last thing, if you've looked at my trading plan, the last thing on my trading journal is P&L. And the last thing, and P&L is the last thing because, while important, and ultimately we are all trying to take consistent money out of the market that we can rely on, it's much, much less important than the process itself. The process is the most important. Now, you don't have to know what happens next in the market or what's going to happen next in order to make money, because again, we are all based on probabilities. So don't forget that. When your edge presents itself, you are compelled to put on the trade. No edge, no trade. So if your edge does not present itself, you don't put on the trade. Period. You can wait all day, and let's say you miss an entry based on your specific edge, and your entry does not present itself the rest of the day. No trade, no trade, no trade. Now, at the same time, if you break your rules anytime during the trading day, and I'm talking about exits or entries and exits, you're done for the day. What that will do is, again, that will force you to watch the chart and go, I am missing out on a monster play because I broke my rules, and I promised myself that if I broke my rules one time during the trading day, that I would not put on a trade. And again, that may sound harsh, but at the same time, you will teach yourself how to do this and how to do this very well. Okay, now let's talk about patterns. And again, I'm not going to talk about patterns, specific patterns. What I am going to talk about, and this is going to be very, very brief, patterns present themselves with statistical reliability, but the outcome of those patterns are random. Now, wrap your mind around that one. Patterns present themselves with statistical reliability, but the outcome of those patterns are random, and they are. That's the outcome of any specific trade is unknown, and it's random. You have no earthly idea when your edge presents itself, whether it's going to be a winner or a loser. So because of this, we must focus only on execution. Process is the only thing that matters. P&L, all it matters. It really doesn't. Focus on the process. If you get the process, the profits will take care of itself. It's process, process, process. Okay. There we go. That is enough about the patterns and all the other good stuff. So what I'm going to do now is I am going to share my trading process. So here we go. I'm going to suck down some coffee here real quick. So this is mine. It doesn't have to be yours. As a matter of fact, we have people in there. There are many different types of traders in here. This is just my trading process. This is what I go through every single day, every day that I'm able to trade. Trading laws. Okay. Now, the 920 crossover strategy is not a new trading strategy. The reason, I'll do a little sidebar here, the reason that your strategy works is because there are millions of other people using the same strategy. So the 920 strategy is not new. Support to resistance is not new. Fib level trading is not new. None of this is new. Now, the basis for this strategy is support and resistance. So read that again. The basis is support and resistance. Now, the combination of both support and resistance in the 920 crossover strategy makes this strategy highly probabilistic. Now, with all strategy, there are nuances that can only be learned through hundreds, if not thousands of hours of screen time. And the goal is to always watch more and trade less. And I will throw out a big hell yeah to our buddy SQ. I heard that from him and was like, that makes perfect sense. Trading laws. You can call them trading rules. I call them trading laws. It seems to be carry a little bit more weight when you call them laws. Trading law number 1, protect your capital at all costs. Blindly entering trades without a good reason is gambling, and we don't do that here. Always wait for trade confirmation before entering a trade. Essentially, no edge, no trade. Law number 2, and we already talked about this, but I am going to reiterate, always predefine your risk before entering a trade. This can be a candle, it can be a level of support or resistance, a specific dollar amount, or a certain percentage. I use, again, an ignition candle. The candle that got me in is the candle that is going to get me out if the trade goes against me. Law number 3, always follow the trend. Do not trade against the trend unless there is confirmation that the trend has reversed. Now, you cannot perfectly time the market, so don't try. Again, this is gambling, and we don't do that here. I'm going to expand a little bit on this. Always follow the trend. Yes, always follow the trend. So I use the higher time frames to tell me or give me a different perspective on what I'm seeing on the shorter time frames. There are times when you are at a specific support or resistance level that has been so strong it might be against the trend. But until you can nail those trades with the trend, you do not want to use You always want to follow that trend. Okay. Now, it's like flying an airplane. Flying an airplane, it's better to not be in a trade and wish you were than to be in one and wish you weren't. Law number 5, emotions are your biggest enemy. You can only be successful with this or any other strategy if you keep your emotions in check. And we've always already talked about the 2 biggest emotional trade killers. Those are hope and fear. Law number 6, the first part of the move is typically the strongest. Not always, but typically. Okay. So if you can get in on that first move, get in, make your money, and be done. And that's fine. Live the rest of your day stress-free. Number 7, contracts will lose value in times of consolidation/accumulation. Contracts will also lose value through theta, or the time decay of money, the closer you are to expirations. Law number 8, and this is a biggie, let your trades play out to their natural conclusion. Do not be too quick to take your profits. You should always have a spot on a chart, support or resistance, or it can be a 920 cross. It can be anything your rules say it is, to have a target. Law number 8, successful trading is based on probabilities. We are not reliant on a trade-by-trade basis to be successful. Rather, we rely on a series of trades over time to judge our trading effectiveness. I've got to thank Mr. Mark Douglas for a lot of the things I'm saying from a psychological standpoint. That was one of his big ones. We are not reliant on a trade-by-trade basis to be successful. Law number 9, you will have winning trades and losing trades. Losing trades is part of trading. Do not get down on yourself when a trade doesn't go in your favor, unless you did not predefine that risk. It goes against you and it smashes you in your head. Law number 10, the only thing that matters is trade execution. And you will notice a theme here. We talk about execution, 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 because that's what it's all about. Being able to flow in and out of your trades without trading errors is more important than making money. Okay? As long as you have that verifiable trading edge, the probabilities will work out in your favor if you can execute. You must be able to execute. Law number 11, do your best to trade with a carefree attitude. Doesn't matter if you win, doesn't matter if you lose. And I know I say this all the time. Jimmy said it yesterday at the end of the trading day. If you had a red day and followed your rules, congratulations. You followed your rules. You executed based on your trading plan. Okay? And again, it's a marathon and not a sprint. Law number 12, trust the process. Always trust the process. It's critically important to fall in love with the process, as it is the process that will ultimately determine your success or your failure. Now, treat trading as you would any other business endeavor. You're going to give money back to the market. It's just like a business. You're going to have to pay the cost of doing business to do business. Law number 14, trade only A-plus setups and don't chase trades. We are not dogs. If you miss the move, wait for the next setup. The next setup is going to happen. You don't know when, but it's going to happen. So don't chase trades. Your success or failure is dependent 100% on your ability to follow these or your own trading laws, rules, and the process. Read that again. It's not anybody else. It's not what anybody else in this Discord is doing. It's not the market makers. It's not the big boys. It's not the traders on the other side of the world screwing you. It is your own mental ability to do this and do this effectively. Okay? It's nobody else. Look in the mirror. It's you. It's us. We are individuals. This is an individual sport. The good news is we've got a big, giant community here of people willing to help anyone who asks for help. All right, trading process. I start my trading process in pre-market. Okay, that's where it always starts for me. I typically get to my computer and I will use Eastern time. I'm in Central time, but so when I talk about times, I'm typically talking about Eastern time. Trading for me starts in pre. And I believe it's best to set your key levels before the opening bell. That's what I do. Now, there are those of you who use predetermined lines on your chart for support and resistance, and that's fine. You can use Fibonacci retracement. You can use other indicators that will give you more pre-market high, pre-market low, yesterday's low, yesterday's high, areas of support, areas of resistance. You can do all of that, and that is effective. But the reason that I do this manually is because I want to have a good understanding of what the chart is doing in pre-market before I get into a trade. Okay, that forces me to look at the market and go, okay, we had some action here. We had some action there. So I will set those up in pre-market. So what I'm going to do when I set up my chart in the morning, and I use TradingView for my charting, I'm going to look at the high of pre-market. I'm going to look at the low of pre-market. So you guys can see over here, this is my pre-market setup right here. I'm going to use the high. I'm going to use the low. I'm looking for 5-minute double tops. I'm looking for 5-minute double bottoms. That's all I'm looking for. That's all I care about. 5-minute double tops, 5-minute double bottoms. And I will chart those in pre-market. And what you will find is when market opens, it gives you targets. It gives you targets. For instance, we got pre-market high right here. Look at this. Boom, boom, boom. We got pre-market low right here. Oh, we ran off this line right here because we had a 5-minute double top right in here. Guess what? Failed. It ran down. We touched this. This is your target down here. Oh, guess what? We're having a hard time getting back down below that. Oh, let's run up here. Let's see if we can breach that pre-market high. Somebody needs to mute. If not, I will come and server mute you. Okay, so, and we will go over charting here in just a little bit to show you the beauty of the pre-market charting. Now, pay very close attention to the 5-minute chart as in pre-market, as it will show the expected first move after market opens. Okay, so I am looking at my trend in pre-market to determine what I'm going to do at open. Now, I typically don't trade the first 10 or 15 minutes. I'm going to wait for the shakeout. And then after that, I'm going to look for a setup. Now, on those days, and it happens maybe once a month, twice a month at the very, very most, I'm going to get a perfect signal at open and I'm going to take it and I'm going to ride it. But it's a little bit too volatile for me. And those moves can be wild swingers. But every now and again, it does happen. Okay, so I'm looking at the 5-minute in pre-market. We're going down, down, down on the 5-minute. Hey, guess what? We're going down, and then it moves back up, and then we're going back down. Okay, so that's what I'm looking for in pre-market. Now, because I execute all my trades on the 1-minute, I do execute every single one of my trades on the 1-minute chart before market opens. Right before market opens, I'm switching to the 1-minute chart. Now, once a market opens, I'm paying very, very close attention to what is going on with both the 9 and the 20, as well as what price action is doing relative to 9 and the 20, along with support and resistance. Let's see. Notice figure number 3. Going into open, we will be looking for calls. So I'm looking for calls here. We got pre-market right here. Look at this. Up, up, up. I'm only looking for calls at that point. Okay. Let's see. Notice that on this picture right here, that reversals will become clear by looking at the 5-minute chart, or you can look at the even higher time frames. You can look at the 15 and the 30. You can look at whatever chart you want to look at. But the 5-minute gives me a pretty clear indication of what's going on. So once I'm in that trade, once I'm in a trade, I'm switching to those higher time frames to give me a different perspective of what's happening with the trend. And again, always do your best to follow the trend and trust what the chart is showing you. And again, watch those pre-market levels. Watch the pre-market levels. They're important. Now, when we have breakouts below or above those pre-market levels, what I'm doing is I'm looking for previous trading days. I'm looking for supply zones and demand zones. So I'm looking at higher time frames, typically 30 and 1 hour supply and demand zones. Yeah, that's what I'm doing. Now, Counter trend trading can be very, very lucrative if you know what you're doing with following the trend. Do not attempt to counter trend trade until you can flawlessly execute your trades without trading errors by following the trend. Okay, so let's get into the overall strategy. So there are several different setups within the 920 strategy. I've got a conservative strategy, an aggressive, a more aggressive, and the old double cross. Double cross is such a high probability play when you're following the trend. It is amazing. Okay, so conservative. Who is that? Do I need to mute him? Okay, so from a conservative standpoint.
Just set it up, Josh, and as I said, what to do.
Okay, I'm going to find him. Stand by, please. I will mute.
You could do that to pay Patricia, because I reckon it'll end up going.
I hate to server mute.
Why would she do that? She's thick, isn't she? But Patricia did say the other day, "Can you do this so close to like this time?" She will know in her head.
Okay, here we go. Sorry, pal. Again, several different setups within the overall 920 strategy. Conservative, aggressive, more aggressive, and the 920 double cross. The conservative strategy essentially says the 9 must cross over to the upside of the 20 SMAs. And yes, I use SMAs, not EMAs. That's what works for me. After the 9 crosses the 20 to the upside, we're going to wait for that first green candle to close. We'll pay close attention to what the candles are doing relative to the 9 and 20. Once you're in that trade, now once the first red candle closes below the 9, it's time to get out of your play and take your profits. If it's a fast runner, close your position into strength. Runners can reverse very, very quickly. Now, while these are lagging indicators, the probability of a profitable trade is extremely high. So that's on a conservative strategy. You can make a ton. You can do very, very well. You can do very, very well with the conservative 920 strategy. But it is the conservative way to trade. And a lot of times on the conservative strategy, a lot of the play is already played out by the time you get your signal to get into calls. But again, it is conservative, and it is called that for a reason, because it's a high probability setup. And the vast, vast majority of the time, you will make money on the trade. Okay. Aggressive 920 strategy for opening a position for calls is the same as the conservative strategy. The only difference is that you don't close the trade when the first candle closes below the 9. Instead, you wait until the 920 crosses in the opposite direction of your play.
Pdaddy, sorry to interrupt, but you muted money too tight to yourself. Everybody else is still hearing them.
Oh, okay.
Not server muted.
Stand by, please.
How would Holly know she lives there?
Let's do this. Huh, look at that. Is that better?
Yeah, okay. That works. Thanks.
All right, sounds good. All right, thank you. All right, we got her now. So the aggressive strategy, again, you're going to let that thing play out. That's playing out for quite a long time. It can go on for a long, long time. Now, the more aggressive strategy is to enter calls after the first green candle closes above the 9, but still below the 20. I call this being in the fishtail. For those of you on voice, you hear me saying regularly, we are in the fishtail. We're in the fishtail because it kind of looks like the fishtail. We are above the 9, but still below the 20. Now, for this strategy, pay very close attention to where you are relative to the 20, as the 20 will oftentimes act as resistance and can reverse very quickly. Now, if you're following the trend, your profit potential on this play is the greatest. You can use the above strategies to close or validate out. So you can use the most aggressive entry and then use a conservative exit, or you can use the most aggressive entry and play the aggressive exit as well. So again, lots of nuances, a tremendous amount of nuances within this or any other strategy. Okay, let's talk about the double cross, and we're gonna look at some double crosses once we get into the charting. Double cross, as long as you're following the trend, is a super high probability setup. Double cross happens when the candle opens below the 9 and closes above the 20. Okay, same candle. So you're looking for the body because obviously the body is open. The body is open and closed. You might have a wick on top and a tail on bottom. Now, the highest probability double crosses happens when there's less than 25 cents between open and close of the candle. We've also got something called a triple cross. That is what happens when you have a double cross and the 920 crosses at the same time. So that's called a triple cross. That is what one of the other members called it in here. I thought that was pretty cool. So the triple cross. So double cross with a 920 cross is the triple cross. Now the on the put side. So that's for puts. It's exactly the same. I'm sorry, this is for calls up here. So for puts, it's exactly the same. The 920 must cross to the downside of the 20 SMA. After the 920 crosses to the downside, we're going to wait for that first red candle to close. And again, pay attention to what the candles are doing relative to the 9 and the 20. Once the first green candle closes above the 9, it's time to get out. And again, if it's a fast runner, sell it into strength. The aggressive strategy says you're going to wait until the 920 crosses over the 20 in the opposite direction of your play. So again, this is going to keep you in for a long time. Okay. And that's okay. It just depends on your strategy. What I have found is if you are not looking at your P&L and you're in a play, the longer you're in a play, the more calm you become. Now, I wear an Apple Watch, so I'm able to monitor my heart rate. And I started doing this a year and a half ago because I wanted to know when I was in a trade what my relative anxiety level was doing. And so my heart rate would show me my relative anxiety. And again, the longer you stay in a trade, typically, as long as you're not watching your P&L, your anxiety level goes down and your heart rate should reflect that. Okay, so the double cross, same on puts as it is on calls. It's just going the other direction. Okay, other considerations. The purpose of any trading plan is to get you into and out of your trades at precise times according to your own specific strategy and trading rules. This can only be accomplished if and only if you have a well-defined plan and rules. If you follow both of these things, you will be successful. Okay, read that again. If you follow, you will be successful. And again, mental. Position size is very important to keep your position size small, and we've talked about this while you're in the learning stages of trading. And again, my recommendation, I don't care how big your account is. You can have $1 million account. If you're throwing large position sizes into as a beginning trader, you're foolish. Might as well I tell you what, just send me the money. I will take your money. Just like the market will, and we can still be friends. The market doesn't give a crap. Now, trading errors. So you should trade single contracts or a single share until you are able to execute your trades without trading errors. Trading errors can be anything from poor entries, exits, chasing plays, etc. It is only after you're able to properly execute your trades that you should move up in position size. And again, this is a marathon, not a sprint. And if your purpose for trading is to get rich quick, close your computer, go sell methamphetamine. No, I'm just kidding about that. Don't do that. But this is not a get rich quick thing. You can take as much money out of this market as you ever dreamed of, but it is not a get rich quick scheme. If you think it is, then you're going to take every shortcut in the world. You're going to break every trading rule in the book, and you are going to end up blowing up your account over and over and over again until you quit. Now, critical tactic. Once you're in a trade, watch only price action and not the value of your contracts. And again, this will keep you from getting too emotional during the trade. Closer you get to your target, okay, whatever that target is, it can be support, resistance, it can be a fib line, whatever it is, then and only then should you look at the value of your trade. Now, advanced tactics. I talk about this all the time. While we execute on the 1 minute, you can always look at the higher time frames, 2, 3, and 5 minute, to keep you in the trade longer. Yes, that's what I'm saying. Looking at those higher time frames will keep you in your trade longer. So if that's part of your strategy, you can check it out. But again, don't trade those higher position sizes until you do really, really well. Old support and resistance are excellent targets for your trades. Now, the market has a memory. We're going to assume that those are strong levels at which to take your profits. Anxiety monitoring. We just talked about this just a second ago, but get some sort of a heart rate monitor. I think it's very important. You'll be able to test your heart rate, which will in turn tell you your anxiety level. Back testing, you've got to be able to do that. Okay, back test it. And that's not something you can do in just a matter of hours. It takes time to back test your strategy. Whatever your strategy is, you must back test it. And then and only then, once you have your specific strategy in place, written strategy, written rules, then you can go live. Trade journal. Now, the only way to know if you are truly or how you are performing is to use a trade journal. Commercial trade journals are available, but you can make your own with an Excel spreadsheet. The items needed for this are date, time. This is what I use. Date, time, trade number, position size, pre-trade thoughts. What are you thinking before you get into the trade? Now, your thoughts during the trade. What are you thinking while you're in the trade? Post-trade thoughts, emotions during, emotions after, and your heart rate before, during, and after the trade. Enter rules. Did you follow them? Exit rules. Did you follow those? And then last, P&L. Notice that the P&L is at the end of the list. And I did that for a very, very specific reason, because it's the least important. If you can nail the rest, if you can nail the process, the profits will take care of themselves. And again, yeah, that's right there. Now, and again, we've already talked a little bit about the mental, the psychological part of trading, but that's the most difficult part. This up here, this stuff up in here, the strategy, that's the easy part. I mean, it really is. And there are people that will disagree. Oh, you've got to have a strategy. Yeah, but if you don't have the mental side of it, guess what? You're going to get thumped, and you're going to get thumped hard. Let's see here. The mental side of trading is why the vast majority of retail traders fail. They don't fail because they don't have a good strategy, because they fail because they fail to execute according to their trading plan. I'm going to ask this well, I'm just going to tell you. 66% of all retail trades are profitable trades. I'm talking about on a trade-by-trade basis, 66% of all retail trades are profitable trades. But only 5% of retail traders can make a living or are actually successful. Read that again. If 66% of all retail trades are profitable, why can only 5% of the people make money consistently? Hope and fear. Hope and fear. You are literally eating like a bird and shitting like an elephant. Okay? Hope and fear. That's a crazy. When I first heard that number, that's a Tom Hogarth number. For those of you familiar with Tom Hogarth, the guy's a master. Both him and Mark Douglas, they are my spirit animals. Let's see, like any other pursuit, trading takes a tremendous amount of time, commitment, persistence, and discipline. There are no shortcuts to the process. You must follow the process to the letter of the law. Your process. Notice I said your process. It doesn't have to be my process or Jimmy or Phibbs or anybody else in this trading community. Golden, it doesn't matter. Your process. Mine is I have a proven strategy. It works for me. Commit to a single strategy and stick to it. Now, this is very, 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 very important. Commit to a single strategy and stick to it. Commit to a single tactic within the strategy before moving on to the next. If you are constantly looking for the next best thing, guess what? You're not gonna do well. Your confidence is gonna take a hit. Commit to the process of one and only one strategy. It can be one and only one setup. If your setup is there, you put on the trade. If your setup is not there, you do not put on the trade. Period. One and only one. And again, it can be whatever you want it to be, whatever you've back tested. It has to be one strategy and one strategy only. Now, once you get past that, you can look at other strategies and then become an expert at those strategies and use it in different market conditions. but one strategy is all you need. Now, it's a big one. Dream so big that it scares you. Set a goal so high that if you tell other people are going to think that you're just batshit crazy. So, you share it with yourself, write it down, make it a goal. And don't let the other people deter you from your goals, okay, trading or otherwise. Biggie right here. Aim to get marginally better every day. We cannot become expert level in anything overnight. Small daily positive changes lead to massive changes over time. Commit to the process of both trading and getting better. And again, here we go. Mark Douglas, Tom Hogarth. They're the trading psychology gurus. Now, here's a huge benefit of being in this community. You have access to everything we have in the library with a tremendous amount of information, and it is just so incredible that it's there. So thank you, everybody who has added to the library. Thank you to Jimmy. Jimmy has spent a lot of money putting a lot of these programs together, a lot of books. So thank you to Jimmy. Big deal right here. In order to be the trader that you can be, you must believe in yourself to your very core. You must believe that you are worthy of the financial wealth that the market can provide for you. Self-limiting beliefs can hurt and will, not just hurt, they will destroy your future trading process. Trust, believe, and know you can do this. Again, trading is the most difficult, easy money you will ever earn in your life. I want to go back to this real quick. I had this goes back well over a year. I had a conversation with a member. And I asked this member, I said, what do you think you're worth? Now, this member, I'm not going to name any names, member's still in the community. I said, what do you think you're worth? He said, I don't know, 50,000, 100,000 bucks. And I said, guess what? That's the most you will ever earn in the market. You will never earn more than what you believe, not just think, what you believe you can be. Okay. And that is true in any pursuit in life. You will only go as high as your own self-limiting beliefs. If you think you're worth 100 grand, 200 grand, 500 grand, whatever that is, that's your ceiling. That is your ceiling, because you are going to stop yourself from going any higher than what you believe your ceiling to be. Let that sink in. And again, I posted this. I posted this in general, so feel free to download it. It's here for everybody. Our goal in this community is to make everybody better and to learn from everybody. I know everybody has something to add to this community. So, bottom line is, you got this. But you got to believe that you got this. So get out there and do it. Do it. Okay, so I'm going to look at see if I have any questions or anything like 10 million to retire. Okay, be positive. I like that. I do like that. OP Commander. Okay, so I think you got him muted. So, okay, before I go any further, anybody have any questions or comments right now? Feel free to open up your mic. I'm going to open up mics for just a few minutes. And we'll talk about that before we go to charting. Anybody got anything? So sorry, streams never worked for me. Might be able to post a slideshow in general. Okay, so Cameron Cash. It's in general already. My trading style, my trading, it's in general. So go check general. Yep, that's the process. That's what I got. That's what I posted in there. So, yep, it is there. That's it. I don't have
a question.
Yeah, of course.
When taking a double cross trade, does that happen on the 5 minute or the 1 minute?
1 minute. Yeah, so we're looking. So you can look at higher time frames and take trades on higher time frame double crosses, but I'm going to execute on the 1. So I'm always looking at what the 2, 3, and the 5. The 5 mostly is doing relative to trend. So let's say I'm trending down. I know that I'm trending down based on the 5 minute. Let's say I'm looking for puts. I double cross down on a 1 minute candle. Boom, I'm in. There it is right there. So just follow your trend for whatever the play is. So the double cross, your trend is going to be the higher time frames, but that 1 minute's going to get you in. But then switch to the higher time frame to keep you in the trade.
I see. And then the 9 and 20 hasn't crossed yet in the double cross, right?
Well, if it's a double cross, the 9 and 20 has not necessarily crossed, but it can be a triple cross where you get the double cross and the 9-20 cross at the same time. That's a good probability. That's a high probability play. But yes, you are correct in your assertion that the 9 has not crossed the 20 to the side that is trying to go in your favor. That is correct. You're jumping the play a little bit is what you're doing. I mean, that's all you're doing is you're jumping the play before the cross.
Thank you.
You're welcome. Anyone else? Anyone else? Because somebody's typing.
I have a question.
Lay it on me.
When should you add to a position? I find when I add, it's always, most of the time, it's bad timing and it reverses.
Okay. Okay. A couple questions for you, Lynn. What's your trading? What's your position size right now?
It's well, it's very small. I mean,
Okay. Is it a single contract? You're trading single contracts right now?
yeah, single contract, but I trade up to like 2 to 4 contracts.
Okay. First things first, are you executing your trades without trading errors right now?
No.
Okay, so we're gonna trade single contracts until we can execute without those trading errors. And you got to trust me on this. So that means entries and exits. So in that case, you're never going to add to a position, whether it's a position going in your favor or going against you. You're going to only trade singles until you can execute without those trading errors. And again, it's the process. It's all about the process. So we're not going to add to even a winning position until we can execute. Okay?
Okay. One more thing is.
And again, that's my opinion. That's my opinion. You can do whatever you want, but that's just my opinion.
No, I agree. I've been trading now for about 5 months options, and some weeks have been good, some weeks recently it's not been good. So I just decided to go back into paper trading until I perform with less trading errors, as you say.
So what I want you to do instead of paper trading, Lynn, is what I want you to do is I want you to, number one, have your established trading rules in place. But I don't want you to paper trade because you've been doing this a while. But instead, what I want you to do is I want you to find any stock with volatility. I want you to trade a single share of stock. So I want you to do that because you have real money on the line. And I want you to follow your rules, whatever your rules are, and get in when you're supposed to get in and get out when you're supposed to get out. So the biggest benefit of that is that you're going to be able to follow your rules with real money on the line. But if it goes against you, it's not going to hurt you as badly as it does with an option. Okay, you still have money on the line, so you might make $3 or $4 or $5 on a play and be the perfect play. But we're just worried about that process. So nail the process on a single share of stock and make sure that you are journaling every single one of your trades.
Oh, I do all of.
Perfect.
The thing is that yesterday I was in a trade and with real money, and I add to my position, and then that's when it reversed, and I was so frustrated that I went into paper trading all day. Yep. Mm-hmm. And I haven't touched paper trading, I guess, for 5 months. So when I was in paper trading all day, I noticed that all the trades I took, it was like 80% were good, and I'm not
sure. Why is that? Do you know why?
Sorry. First of all, I was able to focus more without my real money on the line. When I looked at the trade patterns establishing, the candles, I was really looking at the nuances and the nitty gritty and had a real better feel for it. And I felt like when I had my real money, I was so concerned about not losing or the profits or, a lot of fear going on.
Yeah, you don't have any fear when you're not dealing with real money. That's why I suggest going to a single share of stock, because the money is real, but the anxiety is lessened, because even if it goes against you, it's not going to hurt you as bad as when an option goes against you. That's why we have to focus on that process. And that process you're going to get there a lot faster with a single share of stock than you will with paper trading, because there are real emotions involved when you have your own money on the line. So go to that single share of stock and trust me. You got to trust me and trust that the process will get better if you trade that single share of stock. Now, at the end of the day, I want you to hit that red book or the green book, or red, green, or blue. Even if you're trading a single share of stock, red, green, or blue, follow your process.
Okay, thank you.
You're welcome. Mark, let me see. Inverse shares on the S&P. Don't know. Jack to the T's. What if 9 is crossing the 20 to the upside, preceded by a double cross candlestick, but the stick is actually red, not green? Is this valid? Okay, so no. Wait for another cross. So if you're looking for calls and you get a double cross to the downside, don't just arbitrarily get into puts, because that shit happens all the time. Okay, if you're looking for calls based on your trend, don't get into puts because you have a cross to the downside. You're going to wait for confirmation at that point. I mean, you can, but you're going to give your money back to the market. We don't want to do that. Okay. Anybody else have any questions before I move on to my chart?
I got one for you.
Yes, sir.
All right, your pre-market 9 crosses below the 20, and it opens still 9 below the 20. Is there a place that you can see to get in if you think it's a strong downward trend and you don't want to miss out on it?
Yes, FOMO, fear of missing out. Yes, so it just depends on your overall strategy. Your overall strategy is going to dictate to you when to get into a trade. So you can run through a million different scenarios in your head. If it does this, I'm going to do that. If it does this, I'm going to do that. But the best thing to do from a trading standpoint is to have your well-established rules that I'm only going to do this if the chart does that. So that's all you're interested in. In TLJ, I'm going to talk about that here in just a few more minutes when I get into the actual charting. Jack of the T's, you meant something. Oh yeah, you can trade that. You can trade anything with volatility, just anything with volatility. So does that make sense what I said? If you're looking for too many things, you're going to jumble your brains. That's why you've got to have well-established rules. If the chart does this, then I'm going to do that. And again, it might sound rigid in my thinking, but at the same time, we don't want to be all loosey-goosey with the rules. We want to be as consistent as possible. The only way we're going to be consistent is if we have those well-defined rules and we stick to our trading plan. But I might go over that. That might be one of the things when I go to the charts. That is absolutely how you control the biases. Mr. Bill Nye, the science guy. Okay, anybody got anything else before I go to my chart? This is where the magic happens. Yep, go ahead.
It's kind of a nuanced question, I guess. And if you'd rather do it when we get the charts up, that's fine too. But okay. If I see a double cross, a fishtail, anything on the 1 minute chart, and it's heading up, but I look at my 5 minute and everything is still pointed down. 9 and 20 are still pointed down. I don't touch it. Ah, man, you are so there. You are so there. Yes. But this is my question though. What if I see a double cross on the 1? I look at the 5, and it's crossed to the upside of the 9. The 9 is curling up. The 20 is starting to not drop as hard. Okay. Do I consider that? Even though the 20 is still headed down, the bar is still below the 20. You know what I'm saying?
Yeah. So, and we're gonna hopefully unlock some mysteries, and I don't say that for any other reason than once you look at how I set up my chart. And again, there are traders in here that are excellent traders and know more than I know. Okay, so I'll just that's me, JT. Mine is not the only way to do it, but once I explain how I set up my chart, you'll look at it hopefully in a different way, particularly if you're struggling right now. Okay. Rocket, yes, Rocket, my brother. Okay. Anybody else have any questions before I go to the chart? Mark J, when you say pre-market, what time does that start? 4 o'clock in the morning. 4 o'clock. How do I choose a price target? Joey, we are going to go over that. We're going to go over that. But if you will download, Joey, if you will download my trading process, it's in general right now. You can see everything that I've been talking about up to this point, or a lot. Okay, very good. Okay, we got a couple other people, including Barry, no go dogs. You're right, Spock. I promise. Sometimes notice 1 minute you're moving in a particular trend with follow.
Hey, just
hold on one second. Maybe. It just depends, Ignorant, right? Depends on where we are on the chart. Okay, go ahead.
Correct me if I'm wrong, but it's 4 o'clock in the morning if you have the extended hours turned on and the correct ARCA, isn't it? Otherwise, you don't see it until like 8 o'clock in the morning.
I do believe that is correct. So I pay for the ARCA NYSE data. I pay for NYSE as well as NASDAQ data. So I've got everything up.
Yeah, me too. But some people, they might be looking at 4 o'clock. They're only going to find it back to 8 o'clock. And that's because they don't have that extra benefit stuff.
Fair enough. Chica. So double cross is what you're going to find is on a double cross that it's going in following the trend. I'm looking for either $1 or $2 move out of a double cross. So go back and test that, and you're going to go, "Ooh, wow, that's pretty accurate." So there you go. Yep. Okay, give a couple more questions here. So whatever you got, folks. And again, Ignorant, it depends. It really depends. Use ES overnight levels. Yes. 100% there, Rocket. What is a double cross, Carissa? Double cross happens when when you have a candle opens. So let's talk about calls. We open below the 9 cross, close above the 20 for calls. For puts, we open above the 9, close below the 20. If you look in general, Carissa, you can see my explanation of all those different terms. It's in general under my trading plan. So it is there. So go check it out. How many charts are you actually looking at, and what's your typical scan for you? Are you bouncing around on your screen, or is there everything? Oh man! Oh, see, this is the beauty. I've got my laptop. I've got my iPad here. I might be looking at my iPad. And I'm looking typically at SPY and SPY only. Every now and again, I'll pull up ADD, see what ADD is doing. Anything other than that, to me, is noise. What I am doing is I am switching between time frames regularly. So I'm looking. I know what it's doing, but I just like to have that extra confirmation of switching between the time frames regularly. So that's what I'm looking at. It's right here. I'm literally staring at it. I'm staring at it the entire time. It's right in front of me. Yeah. You put your stop loss when you executed. No mental stop losses from me, because what you will find is that you will have wicks that take you out of the play regularly. So I'm looking for closes. Oh, the different time frames? No, I'm just switching back and forth. I'm looking at one chart on my screen, and I'm switching back and forth between the different time frames. It seems to work best for me. And again, that's just me. It forces me. And again, it's like drawing my own support and resistance lines from pre-market. It forces me to be proactive in looking at things and making changes. Time for a couple more. Actually, we got another hour and a half, so we got plenty of time. And again, if you guys would like to ask a question, just unmute yourself and ask the question. I'll be perfectly happy to answer anything that I can. Yep, I sure do. It sure can be, Mark. You know, those higher time frame double crosses will give you typically high probability plays. But here's the thing: if you play a double cross on the 5 minute, don't switch back to the 1 minute to see what it's doing, because it'll scare you out of the trade. I'll share my setup with you. I'll go over my setup with you. Full body on double cross. It has to be. Yeah. So it has to be an open below and a close above. So we're looking at full body. Take a trade if it is only on 1 minute. A double cross? Yeah, I play double crosses all the time, but I got to make sure that I'm following the trend. If I'm counter trend trading, I'm in and out, fairly quickly.
I'm working on trying to get in and out quicker. What is your usual time limit, or do you set time limits or anything like that?
Are you talking about on a general trade, on a trend trade? Oh, I mean, I can be in a trade for a couple hours. I'm fine with that.
Yeah. Well, yeah, I've done that a couple of times and going the wrong way and then just staying in it too long.
Yeah. So, and again, that's one of those things when I pull up my chart and show you how I set up my day, that's going to give you a pretty good indication of what I'm looking for. Okay. So, now, some of these longer trades, I mean, a couple hours I've been in trades other than volatility trades. If it's a volatility play, like on FOMC day, we might be in the trade for 4 or 5 hours. But we're trading volatility at that time. Mm-hmm. Big green goes against you. Don't wait for the candle to close. Right. Yes, that is absolutely correct, Constantine. So every now and again, you will have a giant Twizzler or a giant Shrek that goes away from you. And at that point, get the hell out of the trade, get a market and get out of the trade. I'm also doing, so I do have the money typically. I used to use what's called a delta multiplier because contracts on Tuesdays and Thursdays were really, really expensive. So I'd go a couple of spots out of the money, buy multiple contracts. So if I'd go 2 or 3 spots out of the money, get 3 contracts for the same cost as 1 contract at the money, I do a delta multiplier. But since contracts are relatively cheap, I do right at the money now. So that is what I do. Zero DTE, that's correct. TLJ.
Pdaddy.
Yep.
Okay, I just want to expand on what is breaking rules. I see a couple of questions that are about that.
Uh-huh.
Even if your rule says you do not chase to do an entry, but you chase and do an entry and you make money on it and you exit with good profit, that's still breaking your rules. It is an incorrectly executed trade.
You are exactly right. And that's the worst thing you can do. The worst thing in the world you can possibly do is break your rules and make money, because that will ingrain really, really shitty trading behaviors and you're going to blow up. You will. You will absolutely blow up accounts. So thank you for mentioning that. That's the worst thing that you can possibly do. If you break your rules, you're done trading for the day. No questions about it.
But it's also an incorrectly executed trade. Even it don't matter if you made money or not. If you didn't follow your rules to the T, it's an error. You failed to follow your own rules.
That's right. That's right. We had somebody in here that made a grave trading error just a couple of days ago and made a shit pot of money on the trade. Not going to call anybody out here. A lot of money. I mean, this is a massive, massive, massive win. And he copped to it. He's like, this was a mistake. This is a mistake. He says, I'm never going to do this again because he made a massive mistake. We also had guys in here made massive mistakes yesterday by not predefining their rules or predefining their loss. And plays went against him by thousands of dollars. And again, not going to call anybody out. But they were hoping that it was going to come back and pick him up. And you know what? It did. It eventually did. But it was very poor trading hygiene, for lack of a better term. So don't break your rules. You break your rules and make money, that's the worst thing that can happen. Don't break your rules.
And another thing too, I like the 20 series trades to test our strategy to see if it works.
Yeah.
If in those 20 trades you break your rules, you don't let that go against your strategy. That's your fault, not your strategy's fault. So don't knock your don't execute 20 trades, 10 of them in error, and say, well, I only have 50% strategy, so this strategy ain't no good. No, Your strategy was good 50% of the time, and it was good 100% of the time when you executed your rules to the T.
Now, notice what you're not saying. You're not saying you're making money on all those trades because you are not, but you are executing your trades based on your trading plan. Now, here's another thing that I add. Let's say you have 19 well-executed trades in a row while you're going through your process or learning the process, but on the 20th trade, you break your rules. Guess what? You get to start over and you're going to 20 again until you can go 20 in a row without breaking your trading rules. You're going to start over. And again, it sounds really, really harsh. But hey, guys, guess what? The market's designed to take as much money out of your pocket as it can, and it will. Follow your rules. Follow your rules. So thank you for bringing that up, my brother. Okay. The way of Yomi, looking is typing.
Let me go one more step further.
Please do. Please do.
Okay, so I started doing the 20 trades, and I base everything on those 20 trades. But what I also started doing was, what was my highest trade? What was my lowest loss or biggest loss? What is my average trades? What's my average gain over those 20? And when you start doing that, people probably call me overkill on mine. But when I look at that stuff, I'm like, oh, wow. I wasn't doing as good as I thought I was. Oh, I lost more than I thought especially when you compare your gains with your losses and you're losing 50% of what you gain, but you don't see that individual trades, but you do see it over 20 trades. And you just sit there and you're like, dang, I'm not doing as good as I thought I was. That's what opens your eyes.
Absolutely. So that's why it's critically important to you got to chart your trades, folks. You have to keep excellent records. It's the only way you can do this. So thank you for that, Barry. Appreciate you, my brother. All right. Somebody asked a question about SPX or SPY. I trade SPY. It's just what I'm thinking about getting into SPX though. And I will eventually, I am sure. But for right now, I'm trading SPY. SPY, there's mass liquidity out there. I think there are absolutely some benefits for SPX. But don't consider XPX until you can nail SPY. And then nail SPY with a whole bunch of contracts because SPX moves fast. Essentially, one SPX contract is the equivalent of 10 SPY contracts. If you can't trade 10 SPY contracts, you have no business trading one SPX contract. Winning by strengthening in a bad habit is, yes, it is. Yeah, you can win all day long with shitty trading behavior, and it's not going to last. You can get really, really lucky and flip a coin, several times, and it comes in your favor. But you know what? Over time, you're going to get thumped. Okay, Waterman's coming in, as is Chikazula. Chikazul. The blue chick. What's up, brother?
I actually want to ask you, what strategy do you recommend for people don't have too much time to trade? Like I probably have 1 or 2 hours a day to trade.
1 or 2 hours a day to trade is perfect.
What kind of strategy would be the best for?
What strategy would you like to trade?
Well, I feel like when it's just a trade that is just going down, it's hard to get a 9 cross in just 1 or 2 hours. What will be the best strategy?
So you could go support to resistance, resistance to support. It just depends on. So if you can trade the first hour and a half, 2 hours, are those the hours that you can trade the first couple hours of the day?
No, it's actually after 1.
Okay, so after 1, and those are decent times to trade also. So whatever it is, and it could be just support to resistance, resistance back to support. It could be looking for Fibonacci retracements. It can be anything as long as you are consistent and focus on one and only one. But to answer your question specifically, I don't know. Whatever works for you. Find something that works for you, back test the hell out of it, and then commit to the process of learning it and executing very well.
Okay, thank you.
You are welcome. If double cross occurs and the next candle crosses below, was the first candle cross nullified? Maybe. And exactly, Marlon, there is no such thing as the best strategy. There is only a strategy, and it doesn't matter what your strategy is. Become expert. Tech Trader nails it. You are gambling. You talk about the idea: the smaller the trade amount, the longer it needs to be at risk, as opposed to larger. Yeah, I'm a firm believer in it doesn't matter your position size. You follow your rules to the natural conclusion of the trade, and again, irrespective of position size.
Hey, Pdaddy.
Yo.
So, you know what you're just talking about. So let's say you're in a trade and you're trying to let the thing run to meet your criteria, but it starts to go against you.
Yep.
And so obviously sometimes there's pullbacks and they freak you out and you might want to get out. But do you have any specific criteria when you get out of a trade before it reaches, your goal or whatever?
Yeah, I'm going to pull up my chart here in just a second and talk about how number one, how I set up my chart and by setting up my chart where it's going to give me those specific targets and what to do if you don't hit the target.
Okay.
So yep, I will talk about that. Hey, Vanna. Do you mean to repeat that strategy or something else? Don't really understand the question. Why do you trade SPY and not ES? Because I'm not a futures guy at this time. Yeah, replay on TradingView is incredible. But Blingley, yeah, that's how you do it. You can do the replay on either TradingView or TOS. How to back test. Okay, Vanna. So back test, what you're going to do is you're going to first have a strategy that you're looking at. And you and I have talked enough times that, you seem to like there is no theta with ES. That is true, Mark Jr. No question. Number one, you want to have a strategy. And number two, what you're going to do is look at historically. I'll get back to you in just a second there, Yomi. And I probably did. You're going to look historically what it's done over a specific time period. So you're going to have to go back weeks and months, sometimes even years, to look at your strategy and see how it plays out over time. And somebody needs to mute themselves. Because I love kids, I really do. Is that Jayhawk? Jayhawk, is that you?
Dad already said you might not get to go to grandma's.
Oh, that would be horrible if you didn't get to go to grandma's. Sorry there, Jayhawk. Sorry. How to do the back test? Yes, that's it. So, Way of Yomi asked the question again, please. Not sure if I am Pdaddy. One of you posted an indicator that's TradingView. The opponents had a double cross. Yeah. It's there. It does work very, very well. How to back test? They can't go to grandma's. How to back test? Yeah. So what you're going to do is you're going to find out you're going to figure out whatever your specific strategy is. For me, it's the 920. And I'm happy to send you how I back tested the 920. How I did it over a series of. I looked at every setup over a series of months and months and months, and then I did a study over, I think, 2 weeks. Now, those played out at the same rate over the months and months, but it took multiple hours just to do a single day. So I only included 2 weeks, and it shows how I went about doing my back tests. So I'll be sure to say, just like the young lady, would you recommend trading options on a single stock? Okay, no. Way of Yomi. What I'm recommending is that you trade a single share of stock, not a single option. I recommend a single share while you are learning and nail your process that way with a single share of stock. And by doing that, you are less likely to take a big hit. So it'll force you to follow your rules where you still have money in the game other than just using paper trading to trade. Okay, Tech. Sasha's got that. I remember when they were coming up with that. It's a really, really nice indicator. What it does is it'll give you a signal based on a double cross, and there are some rules associated with that. And I think there's a volume rule also. So, maybe. I mean, news. 3.5 years, Uncle Leo. I think something like that. Let's see. Our strategy is still effective. News. I mean, news can move the market. Yes, and I will talk about that here in just a second, TLJ. But if the move moves outside of my market, what I'm looking for is I'm looking at higher time frame supply and demand zones based on either the 30-minute or the 1 hour. So that's what I'm looking at. Yes, there is an indicator out there, Mark. I'm sure somebody will post it. I know it's posted somewhere. I'll go over that here in just a second there, Mickey Puppy, but it's 5 minutes. So with that, and I know I got a couple more questions coming in.
Father, what you said.
Do it to somebody again.
It don't say nothing about
Please.
I know you.
Gotcha. Okay, sorry about that there, fleet owner. I will unserve or mute you if you send me a message or put a message in here. That's kind of what I thought. She did yell at me. Sorry, fleet. No, you're not on mute. You are on mute now. But again, I'm happy to unmute you. Okay. Yeah, sometimes they are. Love fleet owner. But sometimes we got to do it's about the overall community here. So, all right, I'm going to my chart, folks. Going to my charts. Okay, trading view. I love trading view. I actually love the Weeble GUI as well, but I love trading view. Okay, this is yesterday's pre-market. So what I'm looking for in pre-market, the first thing that I'm going to do before the trading day starts is I'm going to switch to the 5 minute, and it's going to take me back here. And here we are yet again in pre-market. So what I'm looking for in pre-market, I am going to chart out pre-market high. So there's my pre-market high. I'm also going to chart the pre-market low. So there, make sure that is, yep, that's all pre-market. So there's my pre-market low, somewhere right around in here. Okay, got my pre-market high. I've got my pre-market low. So then what I'm looking for is I'm looking for 5 minute double bottoms and double tops. I got a double top right in here, so I'm going to chart that. I'm going to leave this one alone for right now because it's really close to that one. Okay, so I've got another one right here. I didn't want to put 3 in a row. Now I've got all this action right around in here. So I've got a double bottom here. I've got another double bottom here. I'm going to put a line. Let's just cut it right down the middle and put it right about, I'll just put it right there. Now I've got more action. Got another double bottom. This is early in pre-market. So the early in pre-market, sometimes I'll chart those, sometimes I won't. I got another one right here. But that, again, that's real close to this line right here. So right now I have 1, 2, 3, 4. So you can go ahead and chart that one right there. You got another double bottom. Okay. Now before market opens, I'm going to switch back to the 1 minute. Now you will see that there is an absolute method to my madness once you see the chart playing out in real time. So what we're doing with these different lines on the chart is those are going to be our targets throughout the trading day. That is going to give us a target to shoot for when we're in a trade. And it's also going to give us a target or a spot to potentially put on a trade. So let's switch back to the 1 minute. It's going to take us through the end of the day. So here we go. Okay, so here's market open. We're bouncing around. Look at this line right here. We came down from the pre-market high. We're looking at puts. So look at this. And again, on the 5 minute, and again, not trying to bounce around at all, but look what the 5 minute is doing into open. Into open here. we're on a down. We're moving down. So we're only looking at puts at open at this point. Switching back to the 1. This is going to be really, really cool. Okay, so guess what? And again, I don't play that first 5 or 10 minutes, maybe 15 minutes of open, but you could have played the open, realizing that we failed to get above this line, which is a pre-market line. This is not in play. We're failing to get above this line right here. Look what happens. Our 9 is already below the 20. And look at this, pre-market low. If you get in on a play, we got 2 targets along the way. Look at what it did at our first target. It bounced around. We got through that target. We're going for a pre-market low. There is our target based right there. Look at that play. That is a, what's that? 90.73 down to 88.12. We got, $2.60, $2.70 out of this play right here. If you took this play, monster trade. You're $2 into the day. So that's a $2 play right there, 100% play. Easy money. So we're bouncing around. So if we look at the 5, we're still kind of looking for puts at this time, unless you're playing off of support and resistance. Okay, so look at this. We bounce around. We get up above our pre-market low again. And then we close above the 9, but still below the 20. Look at this target. Look at these targets right in here. Again, this is a pre-market line, and this is where we open the day. We're failing to get back up. So we double cross, and we can write that down to target 1 or target 2. Guess what? We're not getting back to that target. So we're looking to exit at some point. We're either going to, if we're just, focused on, let me back up a little bit. We're looking for either $1 or a $2 move on a double cross. So let's see where we are right there. 389.74. Let's see if we can get to 388.74 on this play. 388.48. We got over $1 move on that double cross. So look for either $1 or $2 on a move on a double cross. 388, 389.74. And again, you could put on this play right here because we failed to get above this line. We used that as resistance. We didn't even get up to that resistance line. We reject, double cross, take it on down, make your dollar. A $1 move is worth approximately at the money, let's say 50 cents per contract. You're in that play for 1, 2, 3, 5, 6, 7 minutes, and you just made 50 cents per contract. Or if you're trading a share, make some money on your share as well. If you're shorting a share. Now, without margin, I don't think you can go short. But, so you're looking for longs only if you're trading a share. But there we go. Now, we're failing to get below this line. Do we want to put on a trade right in here? Questions. My contention is, you can certainly put on a trade right in here, but wait to test that line again. So look at where we are right here. You can put on a double cross play right here and expect to take it up to here, but you might not make it. We're looking for a $1 play. Did we get $1? Absolutely not. 48 up to maximum. You got 50 cents, 60 cents out of that play. Wait to test that line again. You can draw another line right here that we stopped right here. That's perfectly acceptable. I don't. You're better. High probability play. Wait for your play. You can take it any spot in here because, again, we're failing to get below this line, but we did test this low right here. We're failing to get lower. So why not put on the play right around in here? We can put on the play right here. That's an aggressive entry. We're still aggressive right here because our 920 hasn't crossed. Now, if you wait until the 920 cross, we're going to cross on this candle right here. So this is where our cross is confirmed. We're getting in on this candle right here. But again, look at what we did right here. We failed to get higher over here. So you can make the assumption that we might fail to get higher here. And we did. Well, let's test that line again. So we're going to test. We come down. Can you take this cross back to the downside? Absolutely, because again, we are based on probabilities. We are looking for it at this point to come back down to this level. It didn't. So we're going to get out of the play when we breach this line again to the upside. We breached our level of it's support up here. It's resistance down here. We reached our line of resistance back to the upside. We're getting out of that play. At this point, you're looking for calls again, okay? Because we are breaching this line of resistance, going to call it support. And look at this. We're looking for targets. Once we breach this line, you can take this candle or this candle. We're looking for our next line of potential resistance to the upside. And again, remember these lines. These are all pre-market lines. We're going to play it up. We get what? We got a couple dollar move out of this play right here. We got 76 up to $2.50 move because you're playing that 920 and you're basing it all on support and resistance. Now, when you use the 920 strategy and combine it with support and resistance, your plays are going to be much, much higher probability plays. These become lower probability plays, in my opinion, because they are not based on our pre-market lines of support and resistance and where we have already been. Okay, so you can play this right here, but we consider it diddling in the middle, or I do, because we are between zones. We're between zones right in here. Okay, much higher probability play when we get that cross back to the upside right here, and then take it up to our next zone, either here, or maybe you're hoping for, not hoping, but planning to get up to here. But again, there's nothing at this point to suggest we're going to get to this line, but that can be a target. But even on this, you got a $2 move. You got a $2.50 move. Now, when we start breaching again back to the downside, look at what we did. We got up. We failed to get up to this line of resistance. And now we're breaching again back to the downside on this play. Look at where our cross is. You could have taken any of these candles right here. This is a good candle to get in on. And again, we have the benefit of seeing the chart after it is already printed. So we could have taken any of these. I'm not going to take this one, a doji, sitting right on my level of support. I'm going to wait to breach that support. I'm probably going to get in here. Now, if you take that play right there, your targets are 390.71, because again, we are looking for targets based on those pre-market lines. Now, because our candles are a good way away from our line, from our 9, we're not going to close it out here. Now, if we get a green candle close above this, you could potentially take that out, unless you want to open up or look at your higher time frames. Look at your higher time frames is going to give you better trend confirmation. All of these candles are staying below the 9. And as long as you got a target down here, a known level based on our pre-market lines, we're going to see if we can ride this thing down. Okay, so we're going to bounce around. Don't get scared out of that trade, because what do we have? We have another target down here. We're failing to get to this target down here. But look left at what we did earlier. We failed to get lower than that line before. So you can use that line. You could have even established another line, put another line on your chart, because we failed to get lower on this rundown. So you could have established another line and closed out when we got to that line, and consider that line to being a line of support. Or you could have waited until you had a 920 double cross to the upside, or what have you. But again, our targets are going to be a previous spot on the chart where we have already been. I like to use those pre-market lines as my targets. But you just had a monster trade. You went from let's call it 392 even, to 388.50. I mean, you got $3.50 move out of that play. I mean, you pick up $2 on the opening play, $3.50 on. You got $5.50 worth of movement on a couple plays, and you're 3.5 hours into the trading day. Be done for the day. Now at this point, because we are trending down, we are only looking for puts at this point, because we had $3.50 worth of movement down. I mean, certainly you could have played diddle in the middle and taken it back up to here. Or you're waiting for your next confirmation to get back into a play. I took one trade yesterday. I took it on this candle right here. I went from $1.04 to $3.73 per contract on my play. So it was a nice play. I waited for a 5-minute double bottom to get me out of the play. So I was in that play for a good long time. But look at this. This is another confirmation point to get back into the play. Why? A couple of things. Because we breached this level of support back to the downside, and we are in the fishtail. So this is an aggressive entry on the 920 cross because we're excuse me, we're in the fishtail. But we did breach that line of support back to the downside. Excuse me. Now remember, these are all pre-market lines. These are all pre-market lines. This is beautiful. The setup is beautiful. Now, pre-market low. What do we do after our pre-market line has been breached? Well, if you've made $5.50 or $6 worth of movement for the day, you're done. You are done. But if you want to continue trading, you most absolutely certainly can. And the question became, how am I looking for zones after I breach my pre-market high or my pre-market low? Here's what I'm going to do. Let's see. Let's take it into Friday. So what I'm doing at that point is I'm looking left on the 1 hour chart and looking where, and I have to go way back. I have to go back to January to find these zones. January. So quite a long time. So what I'm looking for is I'm looking for a demand zone down here lower. So essentially what I'm doing is I'm looking for a big green candle. Okay, big green candle on the 1 hour. So that's my demand zone down there. People are saying, if it gets to this level, I want to buy. And again, the psychology of the market and the psychology of the players dictate that if I get to this level, I should be at least moderately safe down to this level. So let's call that 3. I'm going to go ahead and put a line down there. Put a line back down there. Move back over. Let's check out the 1 minute. Moving back over. So this is going to be my pre-market. So this is going to be my next level down. Now, what do we do past this? Follow the 9. Trust it. Follow the 9. Follow the 9 all the way down. You can call it Jimmy Town. You can call it anything you want. But at this point, you have done so well during the trading day, and you're at, almost 2 o'clock in the afternoon. You got a couple hours left in the trading day. Be done. Be done for the day. Or, play it back up to a known spot of resistance, which is going to be that line that we established from January. But at this point, if you've done well during the trading day, get the hell out. Enjoy the rest of your day. Make it a long weekend. I want to show you something also that is very, very interesting as far as from a trend standpoint. I'm pulling up the 5-minute chart right here. This is the beauty of watching the 5-minute chart to give you the trend confirmation that you're looking for. Look at where you are relative to the 920 on the 5-minute chart. Look at where the 9 is relative to the 20. Had you taken this rejection, the first rejection of the day, off of that pre-market line of 392.50 on the 5-minute, you get out on the 1 and then switch to the 5. You say, I'm going to ride this thing down as far as I can. I know a couple people did. I know Fan Film Factor took a trade. I don't know if he took this one or if he opened right in here, but he took a trade and ran it to 750% yesterday. So if you take this trade right here, get in, watch your trend confirmation back to the downside or the upside for that matter, because those higher time frames will keep you in the trade longer. But again, always be aware of where you have the action. Always be aware of where your pre-market lines were. So here, pre-market line here, pre-market line here, pre-market line here. This is going to be pre-market line low. And then right here is going to be from January 10th, I do believe. So we're 2 months back. So that's what we're looking at. That's essentially how I set up my chart and how I go about my trading day. You can switch to the 2-minute to give you trend confirmation, and it's going to smooth it out. You can go to the 3-minute and look for trend confirmation based on the 3-minute. Your higher time frames will keep you in place. They'll keep you in place longer, and the longer you get into a trade, watch price action and price action only. It will keep you in. If you want to go full-on crazy mode, look at the 15. You get 15-minute right here. Ride it all the way down. Look at your 30-minute. Ride it all down. execute on the one, but always be looking at those higher time frames for trend confirmation. So again, this is the 920 crossover strategy. I'm using the 920 for confirmation of support and resistance. It is a very, very effective way to trade, but there are other effective ways to trade as well. So, okay, you can just trade off the 5 minute. Yes, you can. End of day, the wick, end of day. Yeah, exactly. Okay. Why would you not take the put at 1102 close below the 9? I don't know. So let me look at 1102. So let me get back to 1102. I think that's one you're looking at right there. You can absolutely take that, but you're predefining your risk. But look at where we are right now. We breached this level right here. That's what we're looking at. We're looking at that level to breach. We breached that. So at least in the short term, we're thinking that we're going to go up. But if you did take this candle to go into puts at 1103 on my chart, and maybe you're talking about calls. If you took this for puts, you want to get out if you breach that line back to the upside. That makes sense. So the candle that gets me in is going to be the same candle that gets me out. We have a double cross here, or almost a double cross. You could take that and ride that down a little bit, but then you're going to stop out rather quickly on the trade. Again, this is going to be your target down here. We're not getting to the target. We're getting out of the trade. Now, if your specific strategy says, I'm going to enter a trade when we get above resistance for calls, then enter when you get above resistance for calls. So you can take a continuation play right in here. You can take a continuation play right in here. You can take continuation play anywhere if your rules are based on taking those continuation plays. So it is all depends on how your rules are set up to get in and get out of trades. You are welcome. Is there a word better than awesome? Because that's, well, hey, thank you, Jayhawk. I appreciate that. By the way, Jayhawk, I did server mute you. I will unserver mute you. Yes, that is all I use, Carissa. That is all I use. Yes, that's all I'm using. I'm only using pre-market. That's the beauty. That's the beauty of set. Now, these lines are going to closely correspond to Jimmy's lines of pivot points. So he uses pivot points. So Fibonacci retracement pivot points. They're going to be so close to his pivot points. But the reason, and I'll reiterate this, the reason I chart my own is it forces me to look at the chart before I get into the trading day. So it kind of forces me to to understand what we're doing from a price action standpoint. So that's what I'm looking at. SMAs, that is correct. Yes, that is correct. Yeah, it really is, Rod. I agree. What about theta, staying in that trade for that long? Yeah, absolutely. The closer you get to expiration, the more theta is going to kick you in the booty. So if you can make your money in the first couple hours of the day, or if you can properly execute your trades in the first couple hours of the day, that's all you need. Yes, but I'm using SMAs. Thank you, Jackie. Okay, Jackie. One strategy and one strategy only. So if you want to, whatever your main strategy is, focus on that one strategy. If it's a 920 based on support and resistance, use that and become an expert. Become an expert. Get to that level or that stage 4 of learning. Become an absolute expert.
Oh, yes. No, I'm nowhere near ready to start the 920 yet, but it's fascinating. I like it. I like what you show. This is great.
You. I appreciate that. Okay, so Renzo Fraser. Why do I feel like it can't be this easy? Because it's not. It's not. It is not easy. There is nothing easy about this. Yes, Bannon, give me just a second. I will talk about that again. So it can't be this easy, and it's not this easy. Nothing about this is easy. That's why I recommend once you're in a trade to not look at your P&L. But nothing is easy about this. But the further you get in your trading journey there, Renzo, the more clear it becomes. But again, if your trade presents itself, you are compelled to put on the trade. But it's not easy. There's nothing easy about it. But you see, based on how I set up my charts, how it plays out. And you can, don't trust me. Do not trust me. I want you to go back and I want you to back test and see how often those lines of support and resistance play out. Okay. But don't trust, just because I said it's so doesn't make it so. I want you to go back and do it for yourself. So go back, please, Renzo. Go back and everybody in here, go back and do it for yourself. Don't take my word for it. Go back and do it for yourself. So what line do you use for reference if the price, and this goes to Vanna's question as well. You are welcome, my friend Renzo. So I will go back. Let me pull up my chart again. So this line right here was not a pre-market line. This 386.49 was not a pre-market line. What I did was I went back to my hourly chart and I looked for a specific day, and I believe this was the 10th of January. So I had to go way back. I had to go to the Wayback Machine. So what I'm looking at is I'm looking for a demand zone. Where are people buying? They're buying in this range right here. So if we breach that area of resistance to the downside, I'm looking for where there are more buyers to pick up to potentially take it back up. So I'm looking for a demand zone low. They're saying we demand to buy shares at this price right here, and I'm not going to buy until I get to this price. So I'm going back to January, and look where we had a run up, and that's what I'm looking for right there. Hope that makes sense. Yes, this session is being recorded. Let's see. I know you are a science guy, Bill. Nah, the science guy. You're welcome there, new guy. Yes. Yes, only to 0400 Eastern time. They're catching Z's, my brother. No. So the nine, what we're looking for is 920 is nothing more than a visual representation of what has happened in the past. So you can use that, and combined with your support and resistance lines, you can make an assumption, an educated guess onto where it is going in the future. You're welcome, Deuce. Yeah, so that's what I'm waiting to do. And again, Carissa, go back. I posted it in general, so you can go back and you can see all the different, or at least a few of the different nuances to the 920 crossover strategy. I'm very happy, Vanna. Yeah, I pay for. I've got the premium plan on TradingView. So the Pro Plus is going to be just as good as the Platinum. I think the only Platinum that you don't get with a Pro Plus is the ability to put up to 8 screens or 8 different charts on a screen. I never do that. 1, maybe 2 at the very, very most. But I do pay for ARCA data. I do pay for ARCA NYSC data, and so that will give you real time. If not, you're getting delayed information. So I pay for the real time data. How do you set up the SMA lines? Okay, so yeah, let's go through the setup on the SMAs. Let's go to my indicators. Actually, that's not right. So let me go to SMAs. So on TradingView, I'm going to pull up SMAs. Click the settings. Now this is just I pulled up a 6 and a 20, but I changed those to 9, 9, and 20. So the inputs, there we go, SMA 9, and I'm looking at the close, SMA 20, I am looking at the close on that as well. Style, there's my style, there's my line size. So I like to use the thicker lines. Precision is default. Visibility is whatever the visibility is, that came pre-packaged in the plan. So there it is. That is how I set up. So I'm looking at the close on all of my SMAs. So SMAs are simple moving averages. You can use exponential moving averages. EMAs, or exponential moving averages, are more, what's the word I'm looking for? The most recent price action is going to be more important on EMAs than they are on SMAs. That's why I use SMAs. And truth be told, I just learned you can use Heikin-Ashi. Of course you can. I've tried it. It's not my style. I learned with SMAs, so I just keep with SMAs. Not right now there, Walter. Not right now. Not right now. 952. Yes, I'm happy to do there. E-res 952. So 952. Well, I like that. Yeah, you can play that all day long. So why? Let me ask you this. Why would you put on that trade? So ERES, why would you put on that trade? What about that trade? What about that position in the market right there? This is for you, ERES, and feel free to unmute yourself or anybody else who would like to jump in. Why or why not would you put on the trade? No, Vanna, I use SMAs only on my longer time frames, my higher time frames also. SMAs all the way. Yes, because you have two things going on. Ignorite named it. So you're looking at the double cross, but at 952, you don't have a double cross at 952. What you have is you don't have a double cross because your candle did not close above the 20. Okay, your wick, you wicked up to it, but what you have is you have that pre-market, you have the pre-market low right there. So we tested that. We opened right at or just below that pre-market low. We got into the fishtail, so you can take that play right there. You can take that. So 388.12 up to 390.71. I mean, you're looking at almost a $2 play, $1.50 play. You can play that all day long. So your first target is going to be 389.61. And notice when we're getting close to targets, we start bouncing around, but we're still above the 9. So then once we get past this target, we're looking for this target up here. But again, bouncing around. We never did get to that target. So that's why you could put on the play. Hey, G, did you miss the entire masterclass, brother? I'm just trying to get to your level. G, for those that don't know, is a dear friend of mine. I'm almost there. I can taste it. Yes, Rod Squad. So yes, G is a dear friend of mine, and G is as good of trader as you will find out there. He runs circles around most people I know. He's that good. Okay. Yo.
Pdaddy,
Yes.
are you using an indicator for your SMAs on TradingView, or you put it in twice, like two different MAs?
So what I've got is on my indicators. Let me see what is. It is basically simple movers. I use simple moving averages by Y Megan, and I'm sure you can use anybody's. So those what I'm using, but I changed my 6 to a 9.
Okay, thank you.
You are welcome. By the way, there's the 920 double cross with the 1.5 time volume requirement. It's by Bull Bear. There it is. 920 double cross with 1.5 times volume requirement. No, G, I've learned more from you. You've forgotten more than I'll ever know. I'm trying to get to your level. Okay. So we're 2 hours in. I've scheduled for another 33 minutes or so. If we need to go a little bit longer, that is just fine. We can go longer. You're welcome. Have a great day, Mark. Have a great day, my friend. Thank you, TLJ. Couldn't have come at a better time. Hey, there are a lot of people in here right now. Thank you, Mark, that are struggling, and they're not necessarily, maybe it's not that you're struggling because you can't read a chart. Maybe it is. Thanks, Bobby. Bobby, we go way back. OG. Thank you, Jeff. Thank you, Rich. But you're struggling not with your relative inability to read a chart. What you're struggling with is the mental side of trading. It is so important. We talked about that earlier. We talked about how fear will destroy you, how hope will destroy you, how hesitation will destroy you, how all of these different things will destroy you as a trader. How that it is critically important that you do your best to trade with a carefree state of mind. It is very, very important that you do your best to try to trade with a carefree state of mind. If you do a mental stop and you see it close beyond, yes. So if it's going against me in a bad way, I'm going to pull the oh shit handle, which is the market out of my trade. Now, you can also mark it out of a trade if it is going in your favor. As long as it's going in your favor, you can mark it out and you're going to get a good fill. You got a fast runner. You want to be in. You want to catch a quick scalp. You can mark it out. Catching G's. Have a great day. Have a great day. Yes, Trade Monkey. That is a great. Excuse me. That is a great question. If the 5 minute shows below 9, below the 20, but the 15 shows the opposite, maybe it just depends. So I'm always going to be aware. I'm always going to be looking also at what the. Thank you, Kenny. I appreciate you, my brother. I'm always going to be looking at or be aware of what the 30 minute is doing. So if you look at historically, when we have a cross to the upside or the downside on the 30 minute, the trend likes to continue that path. So trust those higher time frames. Always look at those higher time frames. If you have a cross to the upside or the downside of the 30 minute, the trend likes to continue. I end up struggling with determining a pullback versus reversal. So Nikki, thank you, Boomer. I appreciate that. Boomer, so you end up struggling to determine pullback or versus reversal. So Nikki, so that is where the lines on your chart, so those different, so the specific support or resistance lines on your chart are going to be important. Now, it's also going to be important for you, at any time, but particularly when you are, yes, thank you. Agree, Gene. I learned that from you. So you know that. Check your higher time frames, Nikki. Check your higher time frames. Spock, that is a massive trading error. That's a massive trading error. Real issue with letting go of a losing trade or even setting a stop loss. Any suggestions? Yes. Predefine your risk before you ever enter a trade. Period. There can be no equivocation. You have to predefine your risk before you ever get into a trade. Now, if you don't, you're going to get spanked. And it's a trading error. That's bad trade hygiene. What do you make of the double cross on the weekly? Oh, I saw that, Rich. I saw the double cross on the weekly chart. And I think I mentioned that in voice yesterday afternoon. So yeah. So interestingly enough, I've never studied the double cross on the weekly. So I don't know. So be positive, my friend. Main issue since you started trading, yeah, you've got to predefine that risk. If you don't predefine your risk before putting on a trade, you are merely gambling. You are hoping that it comes back to pick you up. Thunderboy, yes, that is a wonderful book, and it is a wonderful audio book as well. Chasing and momentum. Excellent question. So you can, give me just a second, Mark. The difference between chasing and momentum, I'll show you here in just a second there, Chica. I'll show you again. If you are a pure momentum trader, then you're trying to get, you're chasing those things. I do not use Active Trader on TOS. I only use TOS after 3 o'clock Eastern time. So I have a TOS, trading accounts with TOS, Webull, and E-Trade. But I don't use Active Trader. So chasing and momentum, if you're a true momentum trader, you're going to catch the momentum and ride it to wherever it takes you. So that's the difference. But it's got to be part of your trading plan. If your trading plan says, if the market does this, then I'm going to do that, then you do this when the market does that. How exactly do you predefine your risk? Mark, I am going to show you how I predefine my risk. Okay, perfect example of predefining my risk. Let us look at 1103. You're thinking, okay, I'm going to put on this trade right here. At 1103, I'm going to try to catch puts back to the downside, which we're making higher highs at this point. Don't know that it is necessarily the best move, but you can catch it in the fishtail here. So you're We have a candle close below the 9, and it is below this level of support. So you can say, hey, that's a good spot to get in. And it's not a horrible spot to get in. Now, if you have a candle close that goes against you at 2 specific levels, you're getting out of the trade. So you can use either, once we breach this level of resistance and it turns into support, we can get out on this very next candle. Or you can have a rule that says, if we have a candle that that breaches this level up here, we're going to get out. But what I would also like for you to do is look at your higher time frames for the trend confirmation. So look at this time. This is the time that you were thinking about getting into those puts, right around in here, or I was. If you're looking at that higher time frame, you're going, there's no way in hell I'm getting into puts because I'm so far away from my 9 on those higher time frames. Even if you look at the 5 minute, this is where we are right in here. You're thinking, there's no way in hell I'm getting into this play. So, but you predefine your risk before you get into that play, and that's going to be an ignition candle. Candle that got you in is going to be the candle that gets you out. Thank you, Spock. Does that make sense? That's the beauty of looking at your higher time frames to give you the trend confirmation. That is what we're interested in. We're interested in trend confirmation. We want to be able to follow the trend. We want to stack the probabilities in our favor. You stack those probabilities in your favor and you're going to do extremely well. So stack them in your favor, folks. How can you why wouldn't you enter on that last play again? Give me the time again. Are you talking about 11? Is that what you're talking about? 11:02? Yeah. So let's talk about why you would and why you wouldn't. And that comes back to 11:02. That's going to be right around here. So here's the reason why you would put on this trade right here at 11:03 on the close of 11:03, because we breached a level of support to the downside. Okay, so you can say that, okay, maybe we're rounding a little bit on the 1. We breached this level of support to the downside. I'm going to put on this trade. So that is why you would. Why you wouldn't is if you are paying attention to your higher time frames. If you are paying attention to your higher time frames, guess what? You're so close to that 9. I mean, you're so far away from the 9 on your higher time frames that you wouldn't put it on. So that's the why, if that makes sense. $3 a month. That is correct, Kenny Lee. That is correct. Fishtail. Yes, I'm going to show you the fishtail. Yes, the difference. So the space between the SMAs, I call it the fishtail. You can call it whatever you want. Fishtail. The difference between your 9 and your 20 is the fishtail. And you can look at your higher time frames. I talk about this a lot. I say the 9, or we have a candle. We're in the fishtail on the 5. We're in the fishtail on the 5 means we have a candle between the 9 and the 20. So right there, we're in the fishtail. We're in the fishtail. Look at your lower time frames to look where we are. So that is the fishtail. All right. Anybody else want to open the mic and talk about anything? That is just fine and dandy. I do. There are a couple people in here that are server muted right now, and I will be happy to unserver mute you. If you have a question, just message here. So we got Jayhawk, we got Jamasol, Deuce, and
Pdaddy.
Yo.
I have thank you for your time. Once again, very valuable information. I have a question. 2 questions. First is, when you're looking at the curl, is there between the 9 and 20? Is there is there a shape that you tend more to versus others?
Yeah. So, let's look at this pattern right here. Let's look at this particular play right in here. This happened at 11:42 yesterday, 11:40, 11:30, 11:45, something like that. You can see how a couple things that I'm looking for. I'm looking at rounding off the top and rounding off the bottom. Okay, so that's on the 1 minute. So when you switch to a 5-minute view, it's going to give you a little bit different perspective. So we switch to that 5-minute view, same exact chart on the 5-minute. Here's what I'm looking for. I'm looking for on the 5-minute, I've got perfect setup right there. I've got a double top on the 5-minute. Okay, that is a moderately decent. That's why I set my my support and resistance lines off of 5-minute double tops and double bottoms, because they are very consistent in that when you get one of those patterns, it typically likes to go the other way. It is typically signaling to you, hey, we've stopped at least for now. Let's go the other direction to try. If we're going low, we're looking for buyers. If we're going high, we're looking for sellers. So the market is looking for liquidity whenever we have a double top or a double bottom on the 5-minute. So that's what I'm looking for. So on the 1 minute, again, it looks like we're rounding off the top. Okay, so that's what I'm looking at. I love these rounding patterns. And when you combine that with the double top on the 5, and you combine that with a breach of support to the downside, go in. Okay, does that make sense?
Yes.
All right. Thank you for that, Trade Monkey, and good morning, Inner Warrior.
Pdaddy, I have a second question.
Yes.
Like volatility was quite high this week. When like some of the IV was about 28 compared to like about 14 or so that we've had normally under normal conditions.
Yeah.
In this situation, the pricing for options at the money was quite a bit higher.
Yes.
If your risk profile was more, say, normally at the money would have been, say, $1, and now it's closer to $2. What would you do in that situation? Would you stretch it to $2 or just go with 1, but your delta would be a lot lower in that situation?
Okay, that is an excellent question. I was talking to actually Raph. I don't know if Raph Money is still in here. Raph, are you still here, my friend? Raph is he gone. Raph is my best friend. He's playing golf right now. So what I used to use on Tuesdays and Thursdays is I used to use, and I will here in just a second, Trade Monkey. I used to use what's called the delta multiplier. So with the delta multiplier, essentially what that was is because Tuesdays and Thursdays, up until recently, they used to be non-expiration days. So the contracts would naturally be much, much higher, 1.5 or 2 times as high as they would on an expiration day. So what I would do is I would look for contracts, a couple spots, 2 spots, 3 spots out of the money, but I would go much, much deeper. So if I could buy 3 contracts, a couple spots out of the money for the same cost as 1 contract in the money or at the money, I would do that because it gives me 3 times the leverage. Or go a couple spots out and just your risk profile is $100 per contract. Just go a couple spots out of the money. But again, just follow your rules, whatever your rules are for getting in and getting out, and then just use your risk profile to determine where you're going to go on the options chain.
Pdaddy, when that happens, you need the market to be moving a little bit, more volatility, right?
Well, you do. But at the same time, let's say you have 3 contracts. They will necessarily move at a pretty good clip because you have 3 times the leverage.
Yeah, I'll do that. And then what I do, the little trick I do is that I'll get on the contract and I'll see if it's moving at all. If it's moving a little bit, then I'll jump in it because it seems like when it's doing that, it'll start picking up speed, and that's where I can get in the money.
Yeah, absolutely. And I basically I learned that type of strategy from a guy by the name of SQ. And SQ, he trades a 30-minute chart, so that's all he trades. But super duper trader, and he'll go 1 or 2 spots out of the money, but he'll go heavy. When I'm talking about heavy, I'm talking about 400 to 1,000 contracts. I mean, we're talking about super heavy.
Balls heavy.
Yes, very much, but super successful trader. Very, very good. Walter, we are talking about everything in here right now that we would be talking about in your one-on-one, but you are literally for one-on-ones. typically do 30 minutes or an hour. And we're in this for 2.5 hours today. Premium. I use premium on TradingView. The next question. Okay, Trade Monkey brought this up. But Walter, here in just a second, I'm going to give you the opportunity. You can unmute yourself and we can talk about anything that you would like. The question was when you're looking for thin volume, and dadgummit, it doesn't show up outside of market trading hours. I use something called, I will show you, it's called volume indicator or volume profile. So volume profile right there, what that is it will give you, it'll show you where the shares have been trading during the trading day based on your time period. So the 1 minute POC, this is what's called the POC right here, called the point of control. You switch to your 1 minute, it's going to give you a different point of control. So that is the point at which most of your shares have been trading. And we like to rotate around this point of control. The point of control will change. So what the volume profile does, when you hear me say there's thin volume at a specific level, that's because heavy volume tends to show almost like a bell shape, a lot of times like a bell-shaped curve. So you have your heavy volume and then it becomes thin. So it's going to give you a graph in here to show you where your thin and heavy volumes are on specific time frames. So that's what I'm talking about when when I say there's thin volume. And price tends to move much quicker through thin volume areas than it does heavy volume areas. And you can see it on the daily. Okay, so if I pull up the daily, let's go to 5-day, 6 months. Yeah, okay, so there it is. There it is. There's your 6 month. Go to 3 months, see if it smooths it out at all. Well, going to have to go to 6 months. 6 months, and this is a daily chart. That you can see where the volume is. So see how this volume is pretty even, and then we have this big volume spike in here. So that's what I'm looking at on volume profile. Let's see, chart time, learn price action. Other than chart time. I mean, that's where it is. It's all learning. It's time in the market. It is late nights, early mornings, every single day. It's committing to the process and sticking to the process. Confused when explained earlier on the chart, you said you would enter a trade because we breached the support to the downside, but the price went way up. Isn't it supposed to drop after the breach to the downside? It doesn't have to do anything. Okay, so we're trying to stack the probabilities in our favor. So if we look at the 1 minute chart again, I believe this was around 11-ish. Yes, 11 something. If I enter puts, let's say, because we breach this level of support right here, you would expect if we continue the downward path, we'd expect this to be your target right in here. But we didn't. We went the other way. But you will see how on the 1 minute this play is not played out yet. And if you look at your higher time frames, your 5 minute that you can see on your 5 minute time frame, that we absolutely positively have not played out. So that's why I'm a big proponent of looking at those higher time frames to get you in or to keep you in the trades, or to look at that 1103. Yeah, that's exactly what I was looking at, Patch Geek. So look at those higher time frames for that trend confirmation to get you in or get you out. If the higher time frame is not agreeing with what you want to do, wait until it does. You are welcome. Yes, we will absolutely do that, Fire Guy. We will. Yes, because Jimmy is recording this today, so we will absolutely do that. Anyone else? Anybody else want to open up the mic? Oh, absolutely. Jameis. It's a great idea to set alarms. Yeah. So setting alarms at specific areas that you would consider putting on a trade, set those alarms, walk away, do something else, play some canasta, play jacks, whatever it is. Just JC. That's right. That's JC. Walter, crack your mic open first and ask your question. Crack your mic open and ask your question first. How do you detect that we are in a consolidation and should not trade? Okay, so lunchtime, we oftentimes have consolidation / accumulation during lunchtime. You can also look at your higher time frames. A lot of times what you see, what you think is consolidation, is we're just kind of, going through, we're kind of diddling in the middle. And that's what we're doing right here. The market is trying to figure out where the liquidity is. The liquidity high? Is it low? Is it fair value in here? The market is always seeking balance. Okay, so it is seeking to balance. It is seeking to find where the liquidity is. So it's seeking balance. Thank you, Trade for Fun. So yeah, and obviously during periods of that consolidation / accumulation, you're losing value. Thank you, JT. Thank you. I appreciate that, my brother. Walter, open up your mic, man. Open up your mic. And then ask questions. That is for Walter. Anybody else want to open up their mic? Jump on in, let's go. I can't hear you, Walter. I don't know that your mic is working. Walter White. Okay, Walter, do you see over here on the... Oh, you can't hear me. You're muted. Not that I know of, Mark Jr. I don't know. Do you set up VWAP? Nah, I'm not really looking at VWAP. I've got a Webull chart that I'll look at. That I'll look at the VWAP. No, I do not set up flags. I do not play flags, so therefore I do not set them up. So that is not part of my strategy. If it were, I would, but it is not. Walter, unmute yourself. Oh, there's Walter. Hey, Walter, what you got there, bub? I see that. You're going to have to say something, man. I don't even see your face lighting up. So I see you are unmuted. You're going to have to go into your settings. I can't hear you. Settings. Okay, can't hear Walter. Can't hear Walter. And if I can't hear him, I'm not going to have you share your screen. If not flags, how do you jump on the continuing trend? Yeah, again, not playing. How do I jump on a continuing trend? Number one, I'm not going to chase. So, for instance, flag. So you call this a flag right here, right? Correct? So we're flagging. You look at your higher time frames. You can play, and this is not even really a continuation play because we're looking for a cross. So we can play it right when we breach this to the upside or what have you. But I'll take continuation plays if it breaches a specific line of support or resistance. But yeah. Yes, there you go, MTB. There it is. Nobody can hear Walter. You can look at his face and see how his face is not lighting up. So, yeah. So if you add both Jimmy's lines and your own lines, you're going to have more lines on your chart than you can shake a stick at. So either add Jimmy's or your owns. Your own chart or Jimmy's lines. Your own lines or Jimmy's lines. But what you will find is that those lines are very, very close together. The reason I do it is because it forces me to look at the chart before market, and it forces me to understand what it's doing. Walter, yeah, I don't know what's going on with Walter's mic. Nobody can hear him. You can look at his face. You might have to go into, well, he can't hear me, so why? Thank you, Joe Bucca. Thank you. I appreciate that very much, my friend. One of the OGs checking in, Joe Bucca. I know you can hear me, Walter. Yes. I know you can hear me, but I can't hear you. You're going to have to go into your settings. Yes, that's it, Tech. Yes. If you knew stock was going from 10 to 20, what strike price would you give you the most bang for your buck? Probably go super, super heavy on 11s. Super, super heavy, because you can buy a bunch of 11s. You can buy a whole bunch more of 11s than you can. You're going to have to go deep into the money, way into the money to buy 19. So why not buy a whole batch of 11s? Thank you, Sasha. I appreciate that, my friend. And by the way, I'll be in Florida in July. Hope to see you when I'm down there spending time with Jimmy. Could be. Could be. He's in the desert. Yeah, must be. Control R. It's like on Donkey. Yes, perfect, my brother. Perfect. Maybe we can play some beach volleyball. I know with that svelte athletic body of yours, you're just up for the challenge. We won. We won. What the fuck define for supply demand? So I'm not a supply demand, but the reason why I talk about supply demand is that when we breach a pre-market level, I'm going to look where there was action in the past. So I'm going to look at specific lines where there is demand that is going to be below and supply where it is above. So I look at that 1 hour chart and I look back to my most recent action at that price level. And that's going to be back in January. So I'm looking at the one hour to chart, and that tells me that there's some buyers or potential buyers down there. So I'm going to use that as a level of support. And likewise, up above for resistance. No idea there, Mark. He's cooking. Yeah, he probably is. There will be a recording. Oh, time frame. Oh, shit. 1 hour. 1 hour. I thought it was, how the fuck? Okay. Sorry, trade. Yes, we will. And that's fine. We will being recorded. I don't trade any other strategies, Sal. I've been trading options for about 1.5 years, a little over 1.5 years. Thank you, Patch Geek. I appreciate that very much. Have a great day. Have a great day, my friend. Thank you, Ivan the Terrible, or Yvonne. And I can't afford to lose my voice today because I have an announcing gig tonight. Well, I'm going to have to drink a whole bunch of warm fluids. Oh my goodness, yes. If you will search for Mark Douglas on YouTube, Mark Douglas Trading in the Zone. That is going to be very, very good. Also, we have a nice audio book in here. It is Tom Hogard, Best Loser Wins. Thank you, TLJ. Thank you. I appreciate that very much. Tom Hogard, Mark Douglas. Look for both of those guys. Get immersed in what they have to offer. I was limiting this to 2.5 hours. And as you can see, my voice is starting to give out a little bit, and I can't afford for it to go out. I have an announcing gig at a casino tonight. Thank you, Chica Zoo. Chica, blue chick, the blue chick. Can I please send them? I will share them right now. Indicators, there it is. What we are looking for right there. Simple moving averages 6 and 20 by Yi Megain, and I changed the 6 to a 9. So just look for simple moving averages on TradingView. Oliver Velez, okay. How about I open a separate account and trade just your 920 strats? You can do whatever you want there, Mark. But again, it's the mental part. It's the mental part. 620 there. You're welcome there, Dad. Yeah, absolutely. The results will speak for themselves. I mean, there's no question about that. And again, it's all about the mental game. I'm not trying. It's so for me. It's not. I'm not saying, hey, this strat is the best. I'm not saying that at all. What I am saying is, any strat will work for you if you are consistent with it. Thanks, Tash. What if you use pivot points and the pre-market double lines? More confusion. Yes, you can use either or. I wouldn't do both. Thank you, Jackie. No, 920. 920. Blue chick. 920. Thank you. Before you go, oh, Thunderboy, are you? God, you're silver muted. Okay. There you go. Your mic is working. Okay, well, say something there, Walter. Thunderboy, you are unmuted, so unmute yourself. Thank you, Trade Monkey. Thank you, Mark. Have a great weekend. Be positive, my friend. Yes, I agree, Frazante. But paper trade. So I use. I like for people to use paper trade to be able to flow in and out of their trades, to know how to do it. Now, once you know how to do it, I suggest trading a single share of stock. That way, it brings the real life emotions into this that you don't get with paper trading. And again, that's just my recommendation. Thanks, Erez. We're 2.5 hours in, folks. I'm going to have to cut this off here pretty quickly because I've got an announcing gig in 4 hours. Hey, Gay Leon, how's it going there, brother? Yes, we will have a recording. Yeah, Walter, unmute yourself again. Walter, unmute yourself. Thank you, Marlon 8 Ball. Thank you, Trade for Fun. I appreciate that. Thanks, B. I agree with that, Thunder Boy. Thank you, Fire Guy. Yes, single share of stock. Ray Quez, yes, I am. I'm an MMA ring announcer, and then I also do big money giveaways at a local casino. So that's what I do. No porn. Attention Osage Casino guests, welcome to Shamrock Rich's promotion here at Osage Casino Hotel Tulsa, where you can win your share of $450,000 in cash and Lowe's gift cards across all locations. Walter, say something.
Hello?
Hey, there's Walter. Walter, check it in. There you are, my brother. I think that's Walter.
Pdaddy?
There you are, man. How's it going?
Pretty good. So if I share a TradingView link, will you guys be able to see the lines that I've drawn?
Yes.
Okay.
Yes, Constantine, I'm a piano player in a whorehouse. Thanks, Tech. Thanks, Lynn.
So on this chart, what I used was OT's TL strategy, and I just added a stop loss and take profit.
Do you have are you on Pro or Pro Plus on TradingView?
I believe I am on the free version.
No, you cannot share your free version.
Oh.
Yeah, so can't see it. So this is what I get. We can't open this chart for you. Yeah. So we can't do that. So I don't use OT's TL. I don't use that at all. So I'm not well versed enough. Post a screenshot. I am not well versed enough to make a educated decision on what it is. I don't use it. It's not part of my strategy. Thank you, Sherlock. Yeah, if you post a screenshot there, Walter, see what you got. I'm waiting for Jimmy to bust in here any minute now. I know he's there.
You guys see that?
Yep, got it. Can pull it up. Bingo. There we go. Okay. So let's talk about it. What are you looking at?
So I am looking at SPY's price of yesterday. This is
Yeah,
at
so I'm
around.
looking at the chart. I'm also looking at the lines that your lines closely mirror mine. So yes. Okay.
So from the start of the uptrend, I drew a trend line. I saw about 4 touches.
Gotcha.
And so the green and the red is kind of the stop loss and take profit.
Okay.
So I just want to know, from your point of view, how does this look? Because this is kind of my basic thought process and I guess strategy for trading.
Is it working? Well, I mean, I already know the answer to that. Are you married to that particular process? Was your expectation to go up here, or what was your so where are you entering? Are you entering right in here at this break of resistance, the breach of resistance to the upside?
No, I would enter during the touch.
So you got a touch. So you got a touch right in here.
All right, let me watch the stream.
Okay. You see me? Do you see it right there? Where are you entering?
Just above the red area.
Okay, so you're entering just above the red area. Okay, so is your expectation to go back up to this line right here?
My expectation is where the end of the green box is, so where the resistance is. Yeah, right there.
Okay, so you got resistance. Okay, so what is your overall question? So you're going to enter, if you got your stop loss right here, you're entering on a touch, one of these touches. You're looking for how many touches? You got 1, 2, 3 touches. You're entering on this big green candle right here. I mean, and honestly, Walter, I can't, I don't use that as my strategy. I have not studied that strategy. So he calls it the TL calls it the Genesis play, whatever he calls it. I have not studied that particular play, so I'm not the best person to probably ask. But you do have that good resistance line right here. You know, we use that. We established that in pre-market. So you're using that so that could be your profit target up at that resistance line if you're playing this trend line back to the upside.
I can't hear you.
You can't hear me?
Talking?
I am talking.
Okay.
Can everybody else hear me? That is the question. Can everybody else hear me? Okay, everybody else can hear me. Walter, can you hear me? Just go ahead, Galen. Just ask your question.
Hey, good morning, Pdaddy. Can you hear me?
Yeah, hell yeah, I can hear you. What's up, brother?
What's up? How's it going?
Good.
My question is, I don't have an issue finding a strategy or finding entries. My issue is managing my trade once I'm already in.
So how are you doing it now?
I'll say that again.
How are you managing your trade once you get into it now? And where are you struggling with that?
With my emotions.
Yeah. Okay. Yeah.
And I'm struggling with eating like an elephant and pooping like a bird. I'm doing the opposite.
Yes, you are. But you know what? So that's okay. You're in stage 2 of learning, and that is a fine place to be. So number 1, you always want to have a specific target, okay, to get out of the trade. Number 2, once you are in that trade, you must trust your process. So trust your process that you have a target that we are going to. That's your target. Okay, so that's where you want to go. So once you're in a trade, do not watch your P&L. Watch price action only. and let the price action take you out of the trade. That is the only thing that is the only, do not watch your P&L. If you watch
That's all I
P&L,
watch.
I know, and that's what most people do. They're like,
Yes.
I don't want to give any money back to the market. I'm going to punch out, and you punch out way early, and then you're like, damn
And
it,
then it
it kept on
skyrockets.
going. The market never gave me a signal to get out of my winning trade, yet I punched out when I made a minuscule amount.
Yes.
Yeah, quit doing that.
And when it's losing, I'm holding on. No, it's got to turn around. And then
That's where you got to be able to. You predefine your risk before you get into. Yeah, I saw that, Bobby. You predefine the risk before you get into the trade. Meaning, if the market goes against you, so if you get in, let's look at a perfect example of a trade that I'm sure some people took because we breached a line of support. So they took this trade at 1103. It did not play out like they expected it to play out. So you have two lines of defense. Your first line of defense is we breached that resistance, because we're going to call it resistance. It's support up here, it's resistance down here. We breached this resistance to the upside. Candle close above that. That is defense line number one. You can let it play out a little bit more. So if we breach the candle that got you in, breach it to the upside on a close, then we're going to get out of that play. The play is therefore invalid. Okay, but you always must predefine your risk before you get onto the play. Steeler fan, let me unmute you.
Okay, I'm going to try watching the price action this coming week.
That's all that matters. Execution is the only thing that matters. Steeler fan, you are unmuted. Okay, anybody else? We're over the allotted time. I'll go a little bit longer if we have some more good questions. And Walter, I am so sorry about not being well versed on your specific strategy. I'm just not. It's not part of my strategy. I don't do it. Thank you, Galeon. Thank you. I appreciate it.
Pdaddy, I have a question.
Yes. Hey, how you doing there, blue chick?
Good. When you're playing break of support and resistance,
yes.
When do you enter in the first candle that break the support, or in this, or after it retests?
Okay, so that is a great question. That's actually a wonderful question. So a lot of times when you break support to the downside, okay, you can use that candle as your ignition candle, or you can wait for a confirmation candle that yes, in fact, we are reversing path. So you can wait till this candle right here. So you can wait for your first, second. This is a doji. I'm not ever taking a trade on a doji candle. Indecision on that. We're still looking for some buyers to push it back up. So you can wait for that confirmation candle, which is going to be that second candle. This is an aggressive entry right here. You can enter when the 9 is still above the 20, but before the cross if we are below the 20. So wait for that confirmation on that second candle if you're prematurely entering a trade, or if you feel like you're prematurely entering a trade, wait for that next confirmation point.
Thank you, Pdaddy.
Does that make sense?
Yes, it does. Because sometimes I make a mistake or enter in the candle that broke the support or resistance, and it just goes against me.
Yep. So that's where you want to look at your higher time frames to get that trend confirmation. So for instance, on that particular play right there, we had this double top up here, then we breached. So you're entering somewhere right around in here.
Okay. Sounds great. Thank you.
You are very welcome. What if there is no confirmation candle? No confirmation candle, no trade. No edge, no trade. We are always looking for something to confirm us into the trade. So, no edge, no trade. Trade for fun. Your issue is choosing the proper option strike. I like to go at the money most of the time. At the money. That's for me. And criteria before plotting a support or resistance line. I seem to have too many lines. Yes. I don't know what the hell that is. Yeah, so what I'm looking for Zante is I'm looking at pre-market. That's all I'm looking at is pre-market. So I'm establishing my pre-market high. That's going to be here. I'm establishing my pre-market low. Now, here's the interesting thing about some of these big giant candles with big wicks or tails on them is they're setting liquidity. That's kind of how I see it. They're setting liquidity for the day. They're saying this is where we want to potentially take it. So you can look back, and again, don't believe me, go back and trust it or test it on your own. So I'm looking at pre-market high, I'm looking at pre-market low. I'm also looking at pre-market 5-minute double tops and double bottoms. So let me get back there. There we are. So I got these double top right here. I'm going to get a line there. I've got this double bottom here. I've got all this action right in here, including a double bottom. So that's what I'm looking at right there. I could have charted this one also, but there's just too much action right in here. Between not enough space in between here and here. So that's all I'm looking for. This line right here was not a pre-market line. It was going to be a demand zone from back on January 10th. So that's how I set up my lines. Lay it on me there, Walter. After a double cross.
So are you familiar with the orb strategy?
The opening range breakout strategy. You're going to have to ask Phibbs about that. He plays that.
Okay.
Yep. After, let me see. I lost the message you sent me on SMA setup for on. I'm just going to do this. How about a copy link? There we go. All right, so there it is right there. There is the Pdaddy train said, okay, so after a double cross confirmation, the next candle is in the direction of the move. Do you limit or market? Limit typically. So I'm typically going to, if I see, I'm going to go 2 or 3 cents, sometimes as much as 4 cents more than where I'm limited looking at it. And that'll still give me a good fill. Sometimes I'll mark it in. If it's a fast mover, I'll mark it in. Yeah. You are welcome. You are welcome. Okay, who's got something else? I'm going to go 14 minutes more, folks. I'm past right now, but I'm going to go 14 minutes and not a minute longer than that. Where would you enter here? Look at that. Look at right where your candle is. So that's a perfect spot to take an entry right there because you got your 9 here, you got your 20 here. We're breaching both. So take that play right there. Now, what you're looking at this point is you've got this known resistance in this level right here. Or I'm sorry, you've got known support. And look over here where we've got action. We've got action right around in there. And maybe that's one of your lines that you've established. So that's an established line. Look at all the action in here. But again, your candles are below the 9. Follow that 9 all the way down. So hope that makes sense, Constantine. Yeah, but that's a perfect entry right there. Because you had, you could have entered up here, rode this, and then rode it back down. But that's a really good that's a good spot right there. But this candle moves so fast, then mark it in. Wait for your close. You don't want to get in on when your candle is still open. Wait for the close of your candle. That's what I do anyway. Every single day, go get it. It's a clean chart. So I will typically delete my lines every day on TradingView. Right over here, boom, and I'm going to remove 7 drawings.
Hey, Pdaddy.
Yo.
I had a question yesterday, right after market close.
Okay.
There was
that one right there.
A huge wick.
Yeah, right here.
Yeah. Just for an instant, is that market makers stop loss hunting?
It very well could be. It could be. Yeah,
Okay.
it could be. Yep. It could be. I say it could be because we never know what the true motivations of those guys are.
Right.
Yep. Trade for fun. Yeah, it could be a late print. Absolutely. So in the market strikes, but what expiration? Same day. I'm looking for 0 DTE. I do not do same week or next week. No, I do not. So I'm always looking at 0 DTEs. Hey, have a great day there, Trade Monkey. No, not anymore, Lynn. Not anymore. No more swing trades for me. I've done that in the past. I used to do that with shares. Thanks, Jamie. Have a great day, my brother. Mental all the way. So you can go up to 3 o'clock Eastern time on Webull. You can go to market close on TOS. Actually got 15 minutes until after market close on TOS. I'm not sure, probably on general there, Blackman. Thanks, Eric. Have a great weekend, brother. Hey, remember, you know where I am tonight, brother. Come by and say hi. Thanks, big guy Slim. Oh, you can use it with anything. Presente. By the way, you a guitar player? Have a good weekend, Inner Warrior. And Bill Nye the Science Guy, have a great weekend. You ever come down to Vegas? No, but I like to go to Vegas. When I do, I'll come see you. How can you find a strategy that works? Walter, I'll tell you what, my brother. I posted my strategy in general. Go look at my strategy and study. Use my strategy and see if that works for you. Back test the hell out of it, and then go to town. That is how you find a strategy that works. Any strategy will work. It is up to you. It is all up to you. Use it on paper first. So what you want to do on paper is you want to make sure that you can properly execute your trades. That's why I used to use paper. Once you are ready to go live with it, you trade a single share of stock and follow your rules 100%. Wins and losses don't matter. The only thing that matters is trade execution. Absolutely not trade for fun. No, I do not. No. Yeah, that's an awesome thing there, big guy. No, I don't go that late in the trading day. That's too much gambling for me. If it's 3 o'clock Eastern time, maybe. It just depends on the setup. If the setup is there, I'll play it. ADP3, you are very welcome. You're very welcome. Whatever works for you, but make sure that that the mental approach to trading, that you really, really tighten that up. Have a nice weekend trade. So that's where the magic is. The magic is in the mental side. Maybe. It just depends, Mark. It depends on what strategy. Yeah, that's it. That's it, Walter. That's it. Yes, a chart strategy is a chart strategy. Price on the way down stays below. Look at higher time frames. Mark, you're in a trade. Put your P&L aside, watch price action, check your higher time frames. That will typically keep you. It's not necessary, Thunder Boy. I mean, I think there's a link somewhere, but that is not necessary, my friend. I tell you what you can do, though, Thunder Boy. You can share your knowledge with other people. That's what you can do. You can share your knowledge with other people. That is the only thing that I ask, is that when you get to a certain level, you pay it forward, if you will. Good job, Walter. And then feel free to reach out with any questions that you do have. I would do a one-on-one with you today, Walter, but I can't. I have to protect my voice, so I can't really talk a whole lot more today. Thanks, Mark. Junior, have a great day. And again, open up that small account if that's what you're looking at doing to check out this strat. Thanks, Mike. Thunder Boy. Got 7 minutes, folks, so lay it on me. And anybody that would like to open up their mic, feel free to do so. But we have a few people in here that are server muted right now, so if you want me to unserver mute you, I'm happy to do that. Have a good weekend there, Frizzante. Off to bed. Okay, sleep well, my friend. Sweet dreams.
Hey, Pdaddy, I have another question. This is Gallian.
Let me hold on just a second, Galleon. Let me say something to Walter. Can you use different strategies for different setups? Okay, for you, Walter, no, I don't want you to do that. Here's why I don't, because I want you to become expert level at one setup. So you're going to look for one setup within one strategy and trade that only. Once you can become an expert level with that one setup, then you can look at different strategies for different market conditions. But until you can become expert level, you do not have any business whatsoever moving on to another strategy. Can't make that clear enough. Okay, Galeon, what do you got there, brother?
Okay. My most successful form of trading is when I actually take profits and stop loss orders right as soon as I get in and just take emotion out of it and let it go.
OC orders, baby. Yeah.
Is that a good thing in the long term, or should I just force myself to learn to, trade live?
I think that's a good thing, because with an OC order, as long as you're picking a specific spot on a chart to get, to take yourself out of the trade, I think that's a wonderful thing to do. I love OC orders. Yeah.
You just get wicked out.
And that's the problem. That's the problem with OC orders, is it can wick you out of a trade going against you. Yep.
Yeah.
You can set an OC order, once you're in a trade. So you're setting basically you're essentially setting a trailing stop and a take profit at some point.
Well, I wish you could set trailing stops with options on Webull.
No, you can't.
Yeah.
But you can do an OC order.
You can?
But again,
or options?
Yes.
Okay,
yes.
I'm going to look into that.
Yep. Anybody in here want to learn how to watch lob lollies grow? That's what we're doing when we're watching the chart there, Thunder Boy. Yes. 920 indicators, name on trading view. Yes. Indicators, that is going to be simple moving averages. Mine just happens to be 6 and 20, but I changed the 6 to a 9. So just search simple moving averages.
I have a quick question.
Yes.
Okay. I've recently been setting very firm stop losses. And the thing is that if I believe in the trend, based on the pattern, like let's say it's going on the downside, and I get in too early, and then my stop loss takes me out, and then a minute later the trend goes down, and it makes me feel really bad, because in the past when I've sort of had a bigger stop loss, because I believe in trend, it would go in my direction, but not all the time, because sometimes it would reverse in a very big way, and I would hold on to that hope. So, which is the better option? Because when it stops me out, sometimes I mean, going forward, we talked about I'm trading single share, but in the past, it would stop me out, and I would be out of buying option power, so I couldn't get back into that trade again.
Yeah. So are you saying you run out of buying power?
Yes, when I got into that trade, so I got stopped out, and then I couldn't really get back in again.
Yeah.
Because I'm trading on a very small account.
Yeah, I understand. So Sabotage nailed it. So if your account is that small, wait for the next trading day. If you do have money in your account to get into another trade, you stop yourself out, and then you look for a re-entry.
Okay.
But the thing that you're doing is you're stopping out when you're supposed to stop out based on your trading rules. Never let a trade go past your predefined area of risk.
Okay.
So I don't care what your buying power is, just like Alien said. You tend to hold longer because of buying power. Don't do that. That's a very, very bad trading behavior. We don't want to do that.
Okay. Yeah, that was my question.
So you just wait. You're just going to have to wait, because you don't want that. You don't want that stop to get. You don't want to go past your stop. Don't do that.
Okay, got it.
Yep.
Thank you.
You're welcome. Thank you, Steeler fan. That would be awesome, Steeler fan. Happy to do that. I agree. Sabotage. Oh, okay. One last question. We probably varies per person. How much total percent gain do you look for? I do not. I'm not looking for a specific percent gain. I am looking to execute my trades based on my trading plan. I'm looking to execute based on if I execute my trades well, that's all I'm looking for. So, I mean, I'm going to have days when I lose because that's just the way it is. So I'm not looking for a specific percentage. I like to say that I look for about $3 worth of movement every day. That's what I'm looking for. But again, I still have those losing days like everybody else. Guys, we are at my drop dead date, my drop dead time right now. We've been going for 3 hours, and that means I have about 3.5 hours to rest my voice. If you're getting stopped out, then your entries need some more work. Yeah. Either you're chasing or getting in early. Absolutely. That is true. That is very, very true. Focus on the P&L side. You quit worrying about the P&L side. Quit worrying about it. Thank you, Trade for Fun. Thank you, thank you, thank you. So I am going to sign off for the day, folks. I do have some messages that I will respond to here in just a minute or so. You are welcome, Walter. But again, one strategy is all you need. And that's for everybody else. You only need one strategy to take as much money out of the market as you ever wanted to take out. Okay. So everybody, I hope more than anything that, good for you, Walter. I like that. I hope everybody found value today. Pay it forward. That's what it's all about, my brother. Hope everybody found value in what we're doing. And feel free, again, to reach out with any questions you have. If I'm in front of my computer or my phone and you ask a question, if I get a notification, my phone buzzes, so I will check it even during my gig tonight. So hope everybody has a great day and a great weekend, and study, and work on yourselves. So have a great weekend. I will see you guys later. Oh, and thank you, everybody, for being here. It means a lot, and thank you for the kind words.